Rose, how you doing? Evening, Miles. Good to see you. Max, how you doing? Good to see you. Kerry, good to see you. How you doing? How you been, brother? Evening, Miles. CMF Talk. Good to see you. How you doing? How you been? Dennis, good to see you. How you doing? How you been? Ian, good to see you as well. Evening, how you doing? Pablo, good to see you. How you doing? How you been? What's the news on the Middle East today? Markets are crashing. The markets were crashing due to the Japanese market space. First, the US stock exchange, obviously, there's sort of a collapse situation. And after the US stock exchange collapsing and liquidated quite a lot of money, the Japanese markets opened up and dumped us further in. Now, the Middle East situation, rumors going around that Iran might be thinking about doing some retaliation movements. So far, it's just FUD, in other words, to add on top, not confirmed in any sort of a way. Let's see where we were. Even Professor Miles, CMF and CMF, let's go. Funky brother, how you doing? Camel, good to see you as well, brother. How you doing? How you been? Glenda, good to see you as well. How you doing? How you been? JP, good to see you as well. Good evening, and all CMF. Let's go, JP. Free and Forever, good to see you as well. How you doing? Evening. Comatose, good to see you as well. How you doing? Tell us, what did you buy, Miles? Yes, I'm definitely going to reveal that as well. Tor, let's go. Evening, Miles of CMF. Orphan, good to see you as well. How you doing? Morning. Dale, good to see you as well. Morning. There's no news tonight. Lol, Japanese. Japanese. We have so much news to go through, essentially behind the scenes. So we have news regarding what's happening on the scenes. I have news regarding that update for you, what's happening on the scenes. But I also have news regarding what's happening behind the scenes. In other words, what's brewing. While everybody's distracted on the market swinging downwards, what's actually happening behind the scenes, I have updates on that. So we're going to go through that on tonight's live show as well. What's up, brother? Big news today. A lot of news to cover, actually. Hi, Miles. Bill, let's go. Hi, Miles. What's going on with crypto? I'm down hardly anything. You're down hardly anything, so you're not doing too bad. David, good to see you as well. How you doing? Jim, let's go. Brian, good to see you as well. How you doing? Morning, Miles of CMF. Did you actually get any sleep? No. I bet nobody saw this coming. Nobody saw this coming. Lena, good to see you as well. How you doing? How you been? No, we were expecting, the Japanese market situation. I talked about the Japanese market about, months ago to everybody, and how the US was supposed to basically borrow them dollars. But then the Japanese market opened up and dumped on everybody, he said. Greetings, Miles of CMF. Let's go, Lena. Jim, I brought 20 AVAX. Is that a good buy? That's an incredible buy. Good evening, Miles and CMF. Let's go, Mike. Good to see you. How you doing, Mike? Is XRP going down, bleeding? And the entire market is bleeding, to be fairly honest. But for time being, it seems to be going sideways, unless the next manipulation news is going to be Iran situation or retaliation. Now, welcome to the CMF live show. If you're watching this for the first time ever, welcome to the CMF live show. On this live show, I talk about the most recent things that's happening around the world in terms of news on cryptocurrencies, CBDCs, AI, regulations, politics, everything that you should know about going into the crypto space, and everything you should know about, especially going into a digital world that we're going to be living in very slowly. And by the looks of it, very fast. But welcome to the CMF live show. If you're watching this for the first time ever, and the disclaimer of this live show, as always, is not financial advice, not political advice, and what advice is only for entertainment purposes. Now, we do have quite a bit of news to go through. So, regarding the U.S. government news, we're going to be going through on tonight's live show regarding Arkham Intelligence. So here's a gist of what we're going to go through on tonight's live show. We're going to be talking about the U.S. government transferring about 300 Ethereum. Now, this information came from Arkham Intelligence. We're also going to be talking about the SPK on tonight's live show as well, how the SPK has just essentially published new regulations for cryptocurrency service providers. So while we have this situation going on, there's regulations happening at the same time. We're also going to be talking about tonight's live show regarding the current crypto movements, what's happening inside the market space. I'm going to give you a step-by-step of exactly what's happened since 2020 until now, of how the market's played out. We're also going to be talking about tonight's live show regarding Bitcoin ETFs as well, and how one of Europe's biggest and largest management, essentially hedge fund companies, has just came out and essentially declared that they're holding $500 million in Bitcoin ETFs, something that was never declared a very long time ago. And they just came out with essentially this information now. And we're also going to be talking about on tonight's live show regarding JP Morgan's perspective on the market space and what you should do for a perspective from JP Morgan. We're also going to be talking about Hedera Hashgraph on tonight's live show as well. Hedera Hashgraph has just joined the International Institution of Finance. We're also going to be talking about tonight's live show regarding Fidelity Vanguard going dark. Essentially, regarding the Bitcoin situation as the entire crypto market that was going downwards, Vanguard and Fidelity decided to pull the plug so nobody can sell. We're also going to be talking about Senator Elizabeth Warren on tonight's live show as well. Senator Elizabeth Warren essentially has came out and said that people should not be using cryptocurrencies to bet on politicians. It's very degrading for politicians, as if, a politician is, someone with morals. And politicians don't have morals in any sort of a way. So I'll tell you when we get to that news as well regarding Senator Elizabeth Warren. But we're also going to be talking about a new bill that's been introduced inside the United States. Senators have united to strength and create a Fight Against the Digital Assets Cybercrimes Act that's coming in 2024 as well from the United States. We're also going to be talking about tonight's live show regarding the Bitcoin-friendly app. Now, there is essentially a Bitcoin banking app, which technically is also a cryptocurrency banking app that has now just been green-lighted inside the United Kingdom. The UK has officially green-lighted its first ever blockchain bank, which is major news. We're also going to be talking about tonight's live show regarding the US Securities of State urging Elon Musk to tackle misinformation on essentially X regarding the elections that's coming up. We're also going to be talking about tonight's live show regarding Google Pay and other essentially Google Pay, Samsung Pay, Apple Pay, these types of platforms that are getting involved in CBDC payments. So we're also going to be talking about tonight's live show regarding the former Ripple board member, essentially Ripple board member, is going to be joining Kamala Harris's campaign. A former Ripple board member is going to be a part of Kamala Harris's campaign. Now, we do know that Kamala Harris is pro-CBDC, basically, rather than pro-cryptocurrency. So that could be a reason why Ripple was giving that support to her a while back ago. But now, before we go through any of that news, quite a bit of mixture of major news to go through, perspective news to go through. Before we go through any news, and the first news we are going to be covering on tonight's live shows regarding the US government and transferring 300 Ethereum to, that's just been revealed by Arkham Intelligence. Before we go through that, let's go to the comment section first. But that is the first news we're going to be covering on tonight's live show. US government transferring 300 ETH, starting with 300 ETH. Are they going to transfer any more is what we're going to be talking about. Now, before we go through that, let's go to the comment section first. Let's see where we were. We were at here. Good evening, Miles of CMF. Denise, good to see you. How you doing? By the way, this is a live Q&A as well, just like always. We're live right now on YouTube and on X. By the way, also, thank you so much to everybody that's retweeted this live show right at the beginning of this live show. Thanks so much to everyone that's retweeted and liked and put a comment down in the comment section as well on this live show on X. And thanks so much to everybody on YouTube also that's liking this live show right at the beginning as well. What did you say? You didn't sleep? What's the secret, Miles? What's the secret for not sleeping? I'll be honest, after a while, you just get used to it. Even Miles and CMF, Manny, good to see you as well. How you doing? Miles, I started cryptocurrencies back in early 2023. Today, my balance is below what I started out. Back to square one. You're not back to square one. 18 months later, my portfolio is a minus. Got it. Don't worry. She's a hypocrite about what she said. Yeah, she definitely is. Do you believe that animals should have access? I mean, come on. And then you get morons like this inside the comment section. So someone sold a bag. Yeah, they definitely did. Now, US government transfers 300 Ethereum, and this information is coming out from Arkham Intelligence. So according to Arkham Intelligence, a wallet believed to be controlled by the United States government just transferred 300 Ethereum, valued at approximately $700,000 to a wallet address ending DB46. And this happened last night as well. The on-chain analytics firm also claimed that the funds within the wallet, which now shows a balance of $0, resulted from a US government seizure. Ether essentially interconnected significant selling pressure, largely attributed to a handful of market makers. So unfolding approximately 130,000 Ethereum, valued at around $290 million at the time of writing on the market. This caused Ethereum to sink to lows around $2,100 on August 5th, and the digital asset continues to trade well below its 200-day, essentially, moving average. Ethereum ETF outflows. According to CoinShares weekly inflows report dated August 5th, digital assets investments vehicles recorded their first capital outflows in 4 weeks. Outflows for Ethereum investment funds and products totaled around $146 million for the week, bringing the total outflow figures since the launch of Ethereum ETFs in the United States to $430 million was just leaving Ethereum. CoinShares essentially noted that the data was impacted by the $603 million in outflows from Grayscale's Ethereum trust. So Grayscale was also another manipulator in this scenario. And I've explained before a while ago why Grayscale is a massive manipulator when it comes to ETFs in general, because they're charging a 2.5% fee and they were holding people's assets in locks and so on. Now, which was introduced in 2017, has had a significant outflows since the introduction of Ethereum ETFs in late July. CoinShares Analytics James also reinforced this theory that the current market downturn is primarily driven by macroeconomics factors and geopolitical tensions that's going on right now. This negative sentiment among investors may potentially signal a longer recovery period for Ethereum than was initially expected. So that's the basis on Ethereum, basis on essentially the United States government moving around Ethereum from wallet to wallet. So far, it's about 300 Ethereum, $700,000 has just been moved for Ethereum from the United States government. Nobody knows why they're moving around their Ethereum, particularly in this moment in time. Now, the next news we're going to be covering on tonight's live show is regarding the SPK. So the SPK has just published new regulations for cryptocurrencies, for cryptocurrency service providers. So there are regulations happening at the exact same time when we're going through these turbulences inside the market space behind the scenes. The Capital Markets Board, SPK, just published a new announcement under the law of amendments to the Capital Markets Law regarding cryptocurrency service providers. The announcement included a list of 47 cryptocurrency exchanges and companies that continue their activities and have applied. Additionally, 3 companies that declared liquidation were also listed on the form. These regulations aim to make these activities of cryptocurrency services providers more transparent and essentially auditable. Now, SPK took necessary steps to regulate and supervise the activities of relevant organizations by requesting specific information on documents, active and liquidation lists. Organizations that applied to the SPK were published in 2 separate lists under the names active list and liquidation on the declaration list. This active list essentially includes organizations that meet certain criteria and continue their activities, while the liquidation declaration list will determine their activities. These lists are great for importance for investor safety and orderly function of the market. Organizations that provide incomplete or insufficient information and documents requested by the board were not included in the active list. It was reminded that these lists would be updated if these organizations complete their deficiencies or the SPK concludes its reviews. Additionally, a list was provided for companies declaring liquidation authorization process as well. SPK also emphasized that organizations on the active list have not yet been authorized by the SEC. Yes, so far, these organizations must apply for authorization following the enactments of secondary legislations. The authorization process will be completed after these applications are evaluated by the SPK. The authorization process is seen as a critical step to enhance security in the cryptocurrency market and protect investors. The new regulations were introduced to enhance security inside the cryptocurrencies market space and to protect investors. The SPK aims to ensure that all organizations operating in this field comply with legislations and obtain the necessary permits. This aims to make the cryptocurrency market more transparent, reliable, and regulated. The SPK's announcement provided an important roadmap for cryptocurrency service providers. This is absolutely major news coming from the SPK, something that Gary Gensler has failed to do over and over again. Instead of bringing up regulations and regulating cryptocurrencies or regulating the cryptocurrency markets, like exchanges, for example, Coinbase, Binance, Kraken, and so on, and Crypto.com, instead of regulating them, he's decided to sue them into the ground as much as he can. So the SPK actually stepped up and started bringing in regulations, essentially regulated the entire cryptocurrency exchange scene, which is massive. And again, this is happening while these turbulences are going on inside the market space, where the US, essentially the SPK, has came out and decided to regulate the cryptocurrency exchanges so they're more transparent, more reliable, and that they can move forward inside the United States. Now, the next news that's happened. This is what's happening behind the scenes. While everybody's, looking at the market downtrend and cryptocurrencies might be going, further down or into the toilet, as some people want to describe it. But behind the scenes, they're regulating exchanges. The SPK is coming out with regulations. They've made a list of exchanges, ones that are essentially not bankrupt and ones that are bankrupt, and what the regulations are in place and so on, to make them more reliable, essentially, in their own words, to make them more transparent, more reliable, and regulated at the exact same time. And this is happening when there's market turbulence going on. Regulating crypto exchanges from the SPK, something that Gary Gensler and the SEC have failed to do for a very long time. Now, crypto markets, the perfect storm can lead to further massive, essentially, situations. So this all essentially, let's just start with this. This all started on August 2nd. A $2.9 trillion this is a step-by-step of exactly what's happened so far, if you're not in the loop. On August 2nd, $2.9 trillion vanished from the stock markets, resulting in the worst day of trading since the COVID-19 crash in 2020. Mounting recession fears and other factors have also plunged the crypto markets, flooding the sentiment with fear. Bitcoin has dropped by 27%, Ethereum has dropped by 34%, and more than $1.13 billion in future positions have been liquidated from the cryptocurrency space. The last day market action has dramatically changed the fear and greed index from greed to fear, and very close to extreme fear. The CBO, which is Chicago's exchange, in other words, volatility index VIX, which measures stock market volatility based on S&P 500 index options, reached 65, the highest level since the pandemic crash. This indicates that markets could enter an extreme turbulence phase. The reasons for this downfall are not crypto specific in any sort of a way, but clearly affect the Bitcoin and especially the altcoin market space. On August 5th, 2024, during an emergency analysis call, Maximilian, a financial researcher at 21 Shares, highlighted the potential drawbacks of the crypto market's unique 24/7 trading and availability. He noted that crypto was the only asset that was traded all over the weekend, making it the sole tradable asset as the adverse events unfold. What is driving the recent sell-off? And how essentially have the markets changed so dramatically? Recent market data essentially reflects widespread skepticism about the ability of global policymakers, particularly the US Federal Reserve, to curb inflation without inflicting significant collateral damage. Additionally, many conditions need to be factored into the equation as well. The markets believe a recession could hit the US economy. On August 2nd, the US non-farm payrolls report showed a steep slowdown in hiring in July, with employees adding just 114,000 employees instead of the expected 175,000. With this new data entry, the SAM rule, essentially developed by a former Fed economist, Claudius Sam, hit a 0.53% according to the Fed data, surging from a 0.43% in June. The SAM rule is designed to detect recessions as they begin, not as they unfold. A recession signal is triggered if there are 3-month moving unemployment rates averages increases by 0.5 percentage points or more from its 12-month low. The indicator has successfully identified that the onset of every recession inside the United States since the 1970s. Therefore, the markets could have understood this latest data entry as a possible sign of an upcoming recession and acted accordingly. Claudius Sau explained to Yahoo Finance that the tool was created so that others would notice when to take action. Despite the negative signal for recession, she believes that there is a runway and we are not in that danger zone yet. The sudden market upheaval has led numerous market participants and economists to advocate for an emergency rate cut by the Federal Reserve. Jeremy Signal, an economist and finance professor at the University of Pennsylvania, has called for a 75 basis point rate cut, with a subsequent essentially 75 basis point reduction expected at the Federal Reserve September policy meeting. Japan's yen carry trade sell pressure. A significant factor behind this abrupt market shift is the Bank of Japan's decision to raise its interest rates for only the second time since 2007, through a modest at just 0.25% from its previous range of 0% to 0.1%. The Bank of Japan's increase has been enough to prompt a notable reaction in the markets. Since the 1990s, Japan has experienced persistent stagflation, categorized by essentially rise in unemployment and inflation. To stimulate the economy, the Bank of Japan has set interest rates to nearly 0%, which created an essentially environment for arbitrary known to be carrying trade. Under these market conditions, a prevalent strategy involved borrowing money in yen, converting it into dollars, and investing assets like stocks, real estate, or cryptocurrencies to earn higher returns. The key to this carry trade was achieving a yield greater than borrowing interest rates. When it executed wisely, this strategy could effectively turn into almost essentially free money, leading many traders to adapt it. Japan's recent interest rate cuts sets a new precedent for future adjustments, potentially aligning it with the trend of other global central banks implementing record high hikes. While some traders may have managed to sell their positions in time to secure gains, many market participants may have been forced to sell in panic to cover their operations. Traders facing significant losses and margin calls are selling their US stocks to raise US dollars and convert it back into Japanese yen to be able to pay back their loans. This sudden change in forex trading can lead to more selling pressure on the US stock and all cryptocurrencies in a short term. Disappointing US reports essentially reject a fear of potential AI bubble. The latest data on the US economy, combined with shifting global forex conditions, has coincided with disappointing results from the tech stocks. Technology shares, which have been a leading force inside the United States market space, representing a 42% of the S&P 500 index, was just tech firms, a benchmark tracking the performance of the top 500 US companies. On August 1st, Amazon fell 9%. The e-commerce giant reported a weaker anticipated quarterly revenue. Intel stock plunged essentially and announced a $10 billion cost reduction plan that will lay off 15% of its workforce. Despite positive revenues, reports from companies like Meta, Apple, and Nevada Tech suggesting that investor concerns extend beyond earning results. This has essentially raised a fear of potential AI stock bubbles, further intensifying market anxiety and contributing to increased sell pressure. Investors resort to cash with geopolitical tensions. Geopolitical tensions have been affecting markets since the Russian incursion into Ukraine in 2022. Nevertheless, the markets have progressed despite the turbulence. However, the latest tensions between Israel and Iran have made the market fear a possible greater war in the Middle East. The last time that Iran attacked Israel was on April 15th, which was in response to Israel's attack on the Iranian embassy in Damascus, Syria. Following the attack, the price of Bitcoin nosedived as the world shook with the uncertainty of a possible war between both countries. There is a fear that a war between these arch enemies could escalate in a broader global confrontation, given that the US is a staunch ally of essentially Israel, while Russia and China have a strict alliance with Iran. The extent of other countries' involvements will hinge on their willingness to directly engage in this conflict. Nonetheless, a regional conflict inside the Middle East could have widespread collateral effects, particularly on nations involved in oil production, potentially impacting global markets. Lena, the research associate of 21 Shares, noted in an Atlantic firm in a meeting that despite Bitcoin's narrative as a safe haven, it does not constantly fulfill that role. I've said this many times. Bitcoin is supposed to be a safe haven against, essentially cryptocurrency. So for some odd reason, it does nosedive and it doesn't go against inflation, even though Bitcoin maxers will tell you it does. But nevertheless, 21 Shares views BTC as an emerging store akin to gold. However, also mentioned that during the crisis like the current sell-offs, people don't resort to gold. People resort to cash, which can exploit Bitcoin to essentially dropping in price. Bitcoin price expected to intensify all these conditions, pressure on markets, including the cryptocurrency markets where money is converted into cash. The popular analysts believe that Bitcoin's price downside may last 2 months before a new bullish chart pattern could emerge to a breakout. For its price range, the analyst told Cointelegraph to prepare for price levels close to $40,000 is what they're predicting. At its lowest point, Bitcoin dipped below its 50-week essentially moving average. With a strong buy support right now, it goes even lower, and it would essentially trigger an even more active sell-off as it did in late 2021 and early 2022. If it doesn't hold either, it's worth preparing for a failure towards $42,000, as was predicted. A perfect storm appears to be brewing in the crypto market space, with participants needing to take a broader perspective and stay essentially towards the macroeconomics events that could potentially steer the market back into positive territory as well. So there are both sides of that story, essentially. Okay, so we just covered quite a bit of what's happening throughout this, essentially since the beginning of this month until now, We've covered essentially all the things, all the events, the geopolitical tensions, the macroeconomic events, and so on. That's brought it all the way to where we are right now. Now, the predictions that's been thrown out by many analysts is around $40,000 Bitcoins. But, analysts will also look. The only way we will see Bitcoin dropping to that, to very, very low numbers, the only way we will ever see Bitcoin drop into low numbers is if essentially the corporate section starts doing massive sell-offs. Because the Bitcoin ETF, so in other words, BlackRock is the #1 Bitcoin ETF holder in the entire world. Let's just put it that perspective. It used to be Grayscale, but now it's just essentially BlackRock. But BlackRock, Fidelity, essentially Invincico, 21 shares, and essentially the other ETF market spaces outside the United States, the corporate sector would have to be the key manipulator to push Bitcoin further. The retail section couldn't do it they could only push it up to a certain extent because the corporate section is actually holding quite a heavy hand. Not just the corporate section, but essentially major banks, major financial institutions, and major countries are holding quite a ridiculous amount of Bitcoin. And it was just revealed today that essentially Europe's fourth biggest hedge fund manager is holding roughly about $500 million worth of Bitcoin that they kept very quiet on and decided to come up with that information today out of all days. So here's the thing. The market is brewing for the next essentially clientele to be entering. And the next clientele that's going to be entering, that was declared by many essentially crypto platforms executives and board members, that revealed that the next customers entering the crypto space is no longer the retail section, it's actually the institutional sector. So the next clientele that's entering the market space is the institutional section, which means right now the market is opening up space for all these institutional investors that are about to be entering the fields, because we are going into heavy regulations, which means the crypto market becomes essentially a very regulated place, a very stable place. It's not going to be extremely stable because the stock market is volatile as well, just like the crypto market is. So, but it's going to become a reliable place for all these institutional investors to be, operating within. So what the market is getting ready for is the next clientele, and it's opening up space for the next clientele, which are institutional investors, due to the amount of regulations we have in place, and more coming. I mean, the SPK just announced they're regulating crypto exchanges, and a lot of people don't know about this, and they live inside the United States. So there's a lot of things happening behind the scenes that we'll still have so much more to cover on tonight's live show. There's a lot more things happening behind the scenes that I'm going to be explaining to you as we go along on tonight's live show. But right now, the market is opening up space. So don't get tricked into falling for any sort of panic sell situations. Obviously not financial advice in any sort of a way, and everything I say is for entertainment purposes only. But right now, the only people that are making massive losses are the retail section, who are panic selling in this situation. And this situation is either you double down or leave the market space forever, unless you got liquidated, because then you just trade. If you're trading, your futures trading, and you get liquidated, that's part of the process. But if you're just somebody that buys cryptocurrencies and holds it for long term and decides to panic sell in these types of situations, you shouldn't be in the market space in the first place, because all you're just doing is just, essentially people are using you as exit liquidity for essentially what's happening. So if you're down, don't worry about it. A lot of people are down, okay? And part two right now is brewing. And essentially part two, you need to have a lot of cojones for part two, because institutions are entering. Always remember one thing, something that I said a very long time ago as well. With the amount of executives that are going to be entering the market space, the executives, the directors, the companies, the banks, institutions coming in general, expect a lot more money, but also expect a lot more manipulation. So right now the manipulation is kicking in, and then the money comes in afterwards. And whoever's brave enough to hold on through this manipulation, the money is going to be coming towards you, because institutional money is a lot of money. But remember one thing, that institutional money is going to go towards legitimate projects, not random projects. So if you're holding in this type of situation, if you're holding camel token, frog token, cat token, essentially Pepe's uncle or Pepe's granddad, don't be looking for so the institutional money entering those crypto projects anytime soon. The retail section might pump it back up, or the whales might help you and give you a helping hand and pump it back up. But Goldman Sachs and essentially all these hedge fund companies inside the EU or the United States or Singapore or Japan or Hong Kong or Dubai or the UK, nobody's lining up from these major institutions to buy Pepe's granddad. But they're all lining up as the next clientele to be entering the market space, to be going for legitimate crypto assets. Remember one main thing: cryptocurrencies are not supposed to be represented as stocks. They're supposed to be represented as a purpose. Cryptocurrencies have a utility purpose. We also had one executive yesterday come out and tweet out essentially that he doesn't care about what's happening inside the market space, because he only sees utility purposes. And he also said that we're going into utilities, or something that I said at the beginning of this year, that this year is all about the world shifting into a complete digital era. So do not be afraid any sort of how the market space is playing out at all, because what's happening right now is just a massive shakeout for the next clientele to be entering the crypto space. So there are two options in type of situations like this, and this is not financial advice, and this is just my own personal preference for entertainment purposes only. But there are two moves, actually there are three moves you can do. One, if you don't have money and you are holding onto your cryptocurrencies and you're holding legitimate cryptocurrencies, you have the option of holding on. Two, you can sell and just leave the market space forever, because you shouldn't be inside the market space if you're a panic seller in situations like this. And step number three, double down on legitimate positions. These are the options you have. It's one, leave the market and just sell, and don't return back to the crypto market if you're going to be the type of person that sells legitimate assets and panic sells. If you're a panic seller, don't be inside of any market space, not the crypto market space or the stock market space. You shouldn't be anywhere near a market space. I'm essentially doing people a favor by essentially telling them, straightforward. You shouldn't be inside any market space if you're a panic seller. So step number one, you can panic sell and jump out if you want to, and don't return to the market space at all. Step number two, if you don't have money, and a lot of people don't have money right now, they don't have a lot of money and they don't have money to reinvest, that's perfectly fine. If you hold on to your positions, you will be better off in the long term. If you hold on to your position, you'll be better off in the long term. Personal preference. Step number three, if you are holding legitimate assets and you have money, double down. Double down on your positions, not financial lessons of it, just my personal preference on the matter. Everything I say is for entertainment purposes only. So, but a perfect storm is brewing, but it's opening up space for these institutions. So are you going to be willing to, essentially buy alongside the institutions and stick alongside the institutions through this turbulence? Or are you going to be the person that sells and jumps out and thinks the Titanic's about to go down? Because I'll be honest, it might look like a Titanic ship is going down, but this Titanic is about to be bouncing up soon as well. Because remember one thing, we have more institutions inside the crypto space than ever before. We have more banks inside the crypto space than ever before, and we have more regulations on a world basis than ever before. We have more regulations, more banks, and more institutions inside the crypto space than ever before. That's not a coincidence. They're preparing. And then you have that major, essentially, EU company that comes out of nowhere, fourth largest hedge fund inside the EU, just revealed today they're holding a staggering amount of Bitcoin. And they kept silent on this information until today. Now, Bitcoin ETFs. On that EU company that I was just talking about right now, here it is. Bitcoin ETF, Europe's essentially Capella Management, discloses $500 million in holdings. The cryptocurrency industry keeps seeking more institutional organizations dive into the sector through spot Bitcoin ETF products. The introduction of a spot Bitcoin and Ethereum ETFs inside the United States now serve as a vehicle for these institutions, investors, to obtain a slice of the digital asset ecosystem. Global investment assets manager Capella Management recently revealed that its financial portfolio now contains crypto. Institutional investors inside the crypto landscape is what's really happening. The company, which is touted as Europe's fourth largest investment manager, just stated that it has approximately $500 million in spot Bitcoin ETFs. Noteworthy, a significant percentage of its holdings is in Fidelity's FBTC and BlackRock's IBIT. According to filings submitted to the United States Securities and Exchange Commission, Capella Management owns FBTC worth about $211 million. It also has $253 million in BlackRock's spot Bitcoin ETF, and this brings the total to $464 million. To a significant extent, this investment reflects the increasing acceptance and adoption of crypto solutions, particularly Bitcoin, amongst institutional investors and the traditional financial sector. It is likely that the SEC's approval of these crypto products brought reassurance and accessibility to these investors. The approval prompts a level of confidence to investors, assuring them of a highly regulated nature of the market. Even the recent Bitcoin price fluctuations of the underlying cryptocurrency has not successfully prevented institutions from taking a move on the market. Even what's going on right now inside the market space has not scared away any institutional investors. Of course not, because institutional investors are smart. They don't panic sell. If the institutional investors were panic sellers, do you think there'll be billion-dollar companies by now? No. You want to own a billion-dollar company? Don't be a panic seller. MicroStrategy remains optimistic about Bitcoin. The state of the crypto market is quite unexpected, with the price of many digital assets, including Bitcoin, bleeding terribly. This is MicroStrategy, Michael Saylor. It is worth noting that the popular economist Peter also had earlier predicted that it could be a 15% gap down for spot Bitcoin ETFs on Monday. Despite this outlook, MicroStrategy chairman Michael Saylor says that he will continue to hold his Bitcoin holdings with diamond hands. So far, the firm has a total of about 226,500 Bitcoins, individual Bitcoins, in its portfolios. As a part of its Bitcoin acquisition strategy, MicroStrategy may seize this opportunity of a price drop to increase its Bitcoin holdings. Already, it announced during its last week Q2 results that MicroStrategy is looking to raise an additional $2 billion in cash to buy more BTC. MicroStrategy is getting prepared to spend another $2 billion, preparing $2 billion in cash to buy more BTC in this type of situation we are right now in. They're also holding 226,500 individual Bitcoins. So if you're picturing yourself looking at your own portfolio, people have most likely opened up their crypto portfolios and they've looked at it and go, oh, I'm down $3,000, I'm down $6,000, I'm down $10,000, I'm down $20,000, I'm down $100,000. Imagine how much MicroStrategy is down on when they're holding 226,500 BTC. Imagine what their essentially position is of how much they've taken a loss in. And still, they're going to be entering and doubling down on their positions because that is the only options you have. They're getting prepared to re-enter $2 billion. So it just goes back to what I said. You have three essentially steps to take in this market space right now. Step number one, if you want to become a panic seller and just become extra liquidity for the view, become a panic seller, but don't return back to the cryptocurrency market space ever again or the stock market space if you're a panic seller. I'm doing you a favor by telling you this straightforward. If you're a panic seller, don't be inside of any market space ever again. Step number two, what you can do is if you don't have any money, most people don't have any more money to invest, that's perfectly fine. But if you hold on to your positions, you'll come out a better trade on the other side with quite substantial amounts of profits. Again, not financial advice, it's sort of just personal preference, and everything else is entertainment purposes. And I said step three is doubling down on your positions. If you have legitimate assets, doubling down on your positions is step three, which is MicroStrategy, Michael Saylor taking step three as an option by doubling down on his position, even though he's at a massive loss situation right now. But he's also going to be doubling down his position. But he's going to do more than doubling down. He's about to invest $2 billion. While this MicroStrategy, Bitcoin strategy has excited several firms to take a slice of the crypto market, many others may even make a decision to do this in this direction soon. MicroStrategy has just started the fire under the rest of the institutions too. Maybe they should be doubling down on their positions as well. So, JP Morgan sees gold mine in crypto dip as well. Market rebound on the horizon ? As investors and other stakeholders grapple with the massive dip in the global market across different asset classes, many have begun dumping on their holdings. However, the financial giant JP Morgan sees this as a market tilting towards buy the dip opportunity. Bitcoin's dramatic fall and rebound. As per the data, Bitcoin crashed to around $49,513 in a rapid decline that took market speculators unaware in early trading. Although the digital asset has witnessed a mild rebound, Bitcoin price remains at $54,579.17 based on the CoinMarketCap figures. Despite this massive drop in Bitcoin price and the selling pressure it triggered, JP Morgan sees the silver lining in the market horizon. According to the banking giant, the rotation in the tech sector has almost been concluded. On such, investors should look out for tactical buy the dip window. When JP Morgan analysts are coming out and saying do tactical movements on buying the dip right now. What they're trying to say is, don't go for Pepe's uncle or Pepe's granddad. What you should be going for is projects that are going to be benefiting you from the institutions coming in. Remember, market moves on market trends. You want to move with a market trend? Well, the next trend is institutional investors. So you should be aiming for crypto projects, essentially, that institutions are going to go towards when they're essentially when they're entering the market space at this moment that we're speaking about right now. So if you're going for legitimate assets, there's a higher chance that institutions are going to be entering the crypto projects that you're holding on to. So when I say do tactical movements on buying the dip, that doesn't mean, honestly, going to Pepe's granddad or cat token or camel token. It means going for Bitcoin, Ethereum, XRP, XLM, XDC, AVAX, because AVAX is doing wonders inside the tokenization field as well, Chainlink and so on. Ton, for example. There's a lot of legitimate projects out there that you could be going for instead of the random meme coin section that you're just going to be ending up losing a lot more money. You want to move on the market trend? Well, here's the next trend. Institutional investors. Get prepared for it. And I've said this for a very long time. Most people inside the crypto space don't like institutions, they don't like banks, and they don't like governments and regulations. Well, I'll tell you one thing for sure. Whether you like it or not, regulations are coming and so are governments. Whether you like it or not, banks are coming. Whether you like it or not, institutions are coming. And the only thing you can do is choose projects that will benefit you from the banks coming in, from the regulations coming in, and essentially from the institutions coming in. If you choose projects that go against the banks, that goes against the regulations, that goes against essentially institutions, you're an absolute moron, because the banks and institutions are going to bring the money in with the regulations. And they're going to go towards legitimate projects. Hence why JP Morgan's analysts are saying tactical buy the dip, not just buy the dip in general, tactical buy the dip. JP Morgan's tactical positioning monitors, John, JP Morgan's head of positioning intelligence, maintains that signals from their tactical position monitors shows that further dips in price of assets remain a possibility. The next couple of also a strong rebound would depend on the future macroeconomic data coming out. As per Bitcoin, the world's largest digital currency crashed below $50,000, level 2 consecutive times within a 12-hour period as investors rallied it. Within this time frame, data from CoinGlass revealed that over $40 million worth of Bitcoin in short positions got liquidated in the midst of the strong reversal. Some have put total short liquidations within this period at over $56 million. Despite these liquidations, some stakeholders have maintained their holding stance. Notably, MicroStrategy falls in this category essentially as a chairman. Michael Saylor recently emphasized his decision to hold, as I just revealed as well, and the broader financial market turmoil. Meanwhile, in the broader financial market, Nasdaq sank by about 5% in the early trading hours of August 8th as the United States Federal Reserve called for an emergency meeting. This followed the 13% crash in the Japanese market, which triggered the global markets and so on. And the many markets experts speculate that the meeting might likely end with a resolution for the US Fed to intervene inside the market space. Ordinarily, there has been anticipation of a rate cut by the authorities in September. However, the intervention before then has not been ruled off, and how will this impact the market remains uncertain. Definitely does for a little bit until we get a better standing. Now, the next news to talk about on tonight's live show, there's a lot of things happening on the scene. There's a lot of things happening behind the scenes from the institutions and the regulations that are coming in place. Now, here is something that also a lot of people aren't talking about today either, which is Hedera Hashgraph has just joined the International Institution of Finance, which is also major news as well. Now, before we go through that, let's go inside the comment section. We have so much more news to go through, even after Hedera's news, so much more other news to go through of what's happening behind the scenes right now. A lot of things are happening behind the scenes in terms of the regulations and the governments and the institutions and the banks, which is the next clientele entering the market field. But before we go through the next news, which is Hedera Hashgraph just joined the International Institution of Finance. But before we go through that, let's go inside the comment section. Let's see where we were, and I read everybody's comments one by one, so I'm going to read your comment eventually. Everybody's taking time to write the comment down, so therefore I respond to everybody, give short, sweet, simple answers, so I get through all the comment section one by one. Let's see where we were at. We were at here. Amount of Apple stock that was sold off, about 2 billion. It was roughly 50% was sold off from one investor. Hey CMF, Stormy, good to see you. How you doing? Hey Miles, how are you doing? Do you believe what's going on to the market and crypto is a black swan? No. Well, here's the thing. I said this is mid. So recently we had a little teaser inside the market space of the market going down. This is the middle drop. We're going to have a very large drop, but it's not now. Miles, what's next for the market? Will it crash more? only on look, the other two things that can crash the market next is we have more major news coming out of Japan's essentially banking systems that is going to go further dipping downwards. That could essentially collapse the market just a little bit more, or Iran's rising tensions with Israel that could essentially make the market go down. But that's a very low chance that Iran will take any sort of action on that matter. And I'm Persian as well. If you're wondering if anybody's watching this, I'm Iranian. I'm fully Persian. So on that matter of Iran, going after Israel, it's never going to happen. They need the law of cojones to be doing that, and I don't think they have them. I'll be honest, the Iranian government. Now, putting that to one side, Miles, what's next for the market? Good evening, and CMF, same. Good to see you. How you doing? For the time, I'm just going to go a little bit sideways. Apparently, the Fed called an emergency meeting. Yes, they did. Is this a big distraction? What's the real reason on all the global issues? This is a massive distraction, genuinely a massive distraction, because there's a lot of things happening behind the scenes in terms of CBDCs, as well as we're speaking about the market turbulence and the World War III situation coming back into the scene, which everybody got distracted with at the beginning of the year. We're going into World War III was the massive distraction at the beginning of this year. And while they were preparing essentially for more regulations in place in CBDC testings. So they're resurfacing essentially old, distraction news, and it's working. But to add some little bit turbulence on top, the Japanese banking system had to do the situation. Now, what's interesting is the US was supposed to borrow US dollars to the banks, to the Bank of Japan. The Bank of Japan was supposed to use that US dollars to buy the US bonds and treasuries, essentially from the commercial and private banks in Japan. But somehow the doors opened at the Bank of Japan, and that plan didn't succeed too well, and which ended up with a collapse. Now, what that has essentially caused is for people to run towards cash. So in a situation like this that we're in, where the Bank of Japan situation of never raising interest rates since 2007 until now, and then we have the US's inflation situation, and we have a war type of situation possibly on the verge, which is not true. But we have all these types of situations going on, and then apparently a lot of people are running towards cash. They're selling their positions in crypto and running towards cash. Why is that a bad idea to sell your positions and run towards cash? Because think about what's happening behind the scenes right now is coming out is CBDCs. So if you sell your crypto positions, by the way, crypto is your ticket to freedom. I've said this a very long time ago, and a lot of people are jumping out of the cryptocurrency market space and running towards cash. If you run towards cash, later on that cash is going to be CBDCs. By later on, I don't mean that far off in any sort of a way. A lot of countries are implementing CBDCs as we speak this year. There are real payments happening in CBDCs in this world right now. As of today, as of yesterday, the month before, there are real CBDC transactions happening. They're just test payments between people, but they are real CBDC money that's being transacted between people right now. Next year, essentially, Brazil is going to be launching with a CBDC, full-on CBDC. Russia is going to be launching with their CBDC as well. The EU is going to be launching with their CBDC next year. There's a lot of countries launching with their CBDCs next year. So if they push a lot of people out of cryptocurrencies this year, that means they'll have more people fully on CBDC starting next year. So if you're thinking about selling your positions and going towards cash, you're a moron, because you're going to be stuck on CBDCs with no cryptocurrencies, which is the worst plan you could possibly have. And also remember one thing: everybody wants to live that lifestyle of Wolf of Wall Street or Jordan Belfort lifestyle or so on, and everybody likes to talk about buy the blood, essentially. And when there's blood on the streets, buy, and when they sell before the champagne comes, those situations, everybody talks about it. But when the situation really happens to you, most people panic instead of buying the blood on the streets. There's a reason why a lot of investors have sold off their stocks and piled up on quite a bit of cash, but they're doing it to re-jump in on better price points, while the retail section just jumped out and fully panicked and left. Not everybody inside the retail section, but quite a majority of the retail section. Now, how I know this is because at the beginning of the live show, we went through the notes essentially of the data that's just come out from in terms of exchanges and bank accounts, and data in terms of cash supply and so on, of outflows of exchanges and the ETF space and so on. Now, let's see what the next question was. But yeah, it's a massive distraction. Sorry, I'm late. Hi, Miles CMF. Peg, good to see you. How you doing? Ghost Burner, good to see you. How you doing? Coin, good to see you. How you doing? Hello, Miles CMF. Let's go. Hello, Miles CMF. Let's go. My brother Miles, Davey, good to see you. How you doing? Money not made overnight, but over time. CM, facts. Something that I've said for a very long time. Money's not made overnight. Money's made over time. If you're the type of person that want to make money overnight, good luck. But if you're the type of person that wants to make money over time, you're going to have a very good luck in life. Trust me. The first one was a joke. Trying to win a lottery overnight on cryptocurrencies, it's not possible. But if you want to make money over time, do tactical movements. Big future ahead of yourself. I've been filling up my bags, steak dinner tonight. Let's go, Mike. What can you tell me about Hulu Chain? Hulu Chain is a great project on the basis of data and Web3. They have done massive amounts of developments. They have a prospering future of themselves. Hi, Miles and CMF family. Good to see you guys. It is time to turn on my CMF TV. Let's go, Theodore. How you doing? Hi, Miles. Do you still think Quant is still a good project? Okay. A very long time ago, I removed Quant from my top 10 in general. A very long time ago, I removed Quant. And I said this a very long time ago as well, that Quant was pushed upon people by mostly crypto influencers. But saying that, Quant does have, okay, here's the thing. Quant has one misinformation around it that a lot of people still don't know to this day. So Quant has one misinformation around it. They have one good partner, which is an Italian financial partner that they have, but which the Italian financial partner has billions in the works. But they've never mentioned what they're exactly building with each other. And the misinformation around Quant has always, the one that I know of, and I've shared multiple times with people as much as I can that are misinformed about Quant, is that everybody still till this day believes that Quant is the partner of Bank of England. Everybody still till this day believes that Quant is the partner of Bank of England. Quant is not a partner of the Bank of England, but influencers push this ideology on people to make them buy Quant so they can jump their bags on them. Remember when Quant went really high and essentially it went really low because the influencers pushed Quant upon your throats and then dropped their bags on top of you by selling you BS information that is partnered with the Bank of England. So essentially, the Bank of England did a project which was essentially called the Rosalind Project. And the Bank of England said, if anybody wants to participate in this Rosalind Project, you can. Anybody could have participated, essentially. So essentially, the Quant said, can we participate? And the Bank of England said, sure. And they were participating alongside many participants. But then the news and the crypto influencers ran with the idea that essentially Quant is a partner of the Bank of England. In reality, it never was. So that's one misinformation, major misinformation around Quant. And that was essentially a very last year, pretty much, where I removed Quant from my holdings. Not slowly, basically. I fed it into other projects. So, in my opinion, there's a lot more projects better out there than Quant. Now, Quant could probably do something somewhere down the line, but for a very long time, they've done absolutely nothing. And there's one massive lie around them. But they do have one partner, and they are a partner of Okoro, but Okoro is partnered with half the crypto space. But they also have one Italian partner, financial partner, which has billions to their name, but oddly enough, nothing's came out on what they're building exactly, or what their contract states. Come this far, staying, not selling. Let's go, Dennis. Hi, Woodhouse. Let's go. How's it going? It's going good, Woodhouse. And I said that a long time ago as well about Quant. When people were saying buy Quant, I said nope. Good mate, just watching my portfolio turn to dust. Don't worry about it. Do you advise to hold on our positions or to double down? Obviously, I wouldn't take it as financial advice. Thank you for your answer. Do you advise to hold on our positions or to double down? Double them. What I tend to do is double my legitimate positions. That's what I tend to do. As long as you're in crypto for long term, you will be all right, Jim. Yeah, facts. 100% in it for the end. Let's go. Miles, how many Ton coins is sufficient? Whatever your budget can essentially sufficient enough for. Everybody's budget is different. Even a small amount, you can outpace other people around you. How long do you think a dip like this will last? Depends. If the manipulation continues, then a few days more. If the manipulation stops, then we should be out of this. If the manipulation continues, we're going for a week of manipulation. But the only manipulation left is the Iran situation, which isn't being really escalated in any sort of a way. And they can't milk this whole Japanese situation for too long. So they need another distraction to milk they need another distraction to bring the market down if they want to bring the market down, to open up more space for institutional investors, because they're the next clientele entering the fields. So it depends. If they want to, make some situation where the market comes down even more, they need something else. The Japanese situation, there's only a time period they can milk that news to create fear and panic inside the market space. After that, the fear and panic goes away because it just becomes old news. So we need another massive distraction. Otherwise, we are going on the up. We're going to do a reversal essentially. What up, Miles and CMF? Hope all is well, though. Talk about distractions, bro. Facts. Hey, Miles, as JP Morgan just joined Ripple XRP. I saw that news. I have not confirmed it in any sort of a way, so I won't be able to tell you if it's certain yes or no. Miles, do you think will institutional money go to exchanges, tokens at all? Do I think that institutional money is going to go towards crypto projects? Genuine question that people ask. Coin has just asked it right now. Miles, do you think that the institution money will go towards exchange tokens at all? Well, think of it like this. There's a lot of institutions that are holding Bitcoin. There's a lot of institutions that are holding Ethereum. So already institutions inside the crypto space. Now, there's also a lot of institutions that are holding XRP, believe it or not. One of them being essentially SPI Holdings is holding quite a lot, substantial amount of XRP. But we also have Grayscale essentially holding quite a substantial amount of XRP, substantial amount of Bitcoin, and Ethereum, and Solana, and a few other crypto projects, AVAX, for example, as well. There's actually a lot of institutions already who hold a quite substantial amount of crypto projects. Now, they're entering the crypto fields at a heavy foot style, and they're going to be holding a lot more. So do I believe, essentially, or do I think institutional money is going to go towards crypto tokens? They already are inside of crypto tokens. They're just going to be increasing their positions, and a lot more institutions are about to be joining them. So on the basis of, do I think? No, I don't think. I know the data is there. So on that basis, the data is already there that they are already inside the crypto space. It's just the ones that are inside the crypto space are going to increase their positions, and the ones that are outside the crypto space are about to enter the crypto space of the institutions. Warren Buffett has sold $100 billion worth of his Apple shares. Yes, he's getting ready to do something major as well. Let's go CMF. Let's go CM. Is 80,000 ACH sufficient? That's a great amount. I'm going down with the ship 100%. Let's go Shelly. Miles, any news on the case with Ripple? Yes, we still have a lot more news to come on tonight's lecture as well. Miles, how long do you see it taking for all the institutions to be fully integrated inside the market and we start seeing a surge happening? Well, we don't need all of them for a massive surge to happen. Even some of them will bring a substantial amount of money inside the cryptocurrency space. For all of them to be inside of it, it's going to take a little bit of time. But even for some of them to increase their positions or some new ones to enter the fields, I mean, remember, institutions aren't going to be, entering a market space with $10 in their pockets. They're going to be entering the crypto space with, essentially 10 million in their pocket, 50 million, 100 million, 500 million in some cases from that essentially European market. That European essentially fourth largest hedge fund that just revealed the information of they're holding $500 million worth of Bitcoin, but they were very, very silent on the matter and decided to reveal it out of all days today. So, even the institutions that are already in play, if they increase their positions, it will make the market go up. New institutions entering will also make the market go up as well, because they're not coming in with small amounts of money or change. They're coming in with deep pockets. So, well, if we get all of them, it's going to take a little bit of time. But even some of them, or the ones that are inside the crypto space expanding, we're pretty much good to go. Now, Hedera Hashgraph. Hedera Hashgraph has just joined the International Institution of Finance. Also, with the turbulent situations going on and so on, behind the scenes again, Hedera Hashgraph has just joined the International Institution of Finance. Hedera Hashgraph, a leading public distributed ledger platform, announced its membership with the International Institution of Finance, the IIF, today, closing the gap between blockchain technology and traditional finance. The IIF, a global industry association representing the financial services industry, has been at the forefront of driving innovation and addressing challenges within the sector. Hedera's conclusion in this esteemed organization marks a significant milestone for the blockchain platform, positioning it as a key player inside the evolving financial landscape. Now, one of the number one category inside the crypto space is finance. That is the number one category. Money going digital is the number one. And I'm not talking about stable coins here. I'm talking about things that help essentially cross-border payments. So finance is the number one category. Second comes data. I mean, we had Saudi Arabia essentially yesterday announcing that data is going to be more important than oil. And this is coming from Saudi Arabia, a massive oil country, announcing yesterday that they're going to be essentially data is more important than oil in their eyes. By joining the IIF, Hedera gains access to a vast network of financial institutions, policymakers, and industry experts. This collaboration is expected to facilitate the exploration of innovative tech, essentially financial solutions, leveraging blockchain technology. Hedera's high-speed, low-cost, and environmentally friendly platforms offer a compelling proposition for financial institutions, promising to streamline processes, enhance security, and improve efficiency. The partnership also signals a growing acceptance of blockchain technology within the traditional finance realm, as more financial institutions recognize the potential of distributed ledger technology. Collaborations like this are likely to become increasingly common. Now, essentially, Harman, the CEO of Hedera Hashgraph, expressed enthusiasm about the partnership, stating, "We are thrilled to join the IIs to shape the future of finance. Hedera's technology offers a unique value proposition for the financial sector, and we look forward to working with the IIF to unlock its full potential." The specific details of the collaboration between Hedera and the IIF are yet to be fully disclosed to the public. However, the partnership is expected to focus on areas such as security tokenizations, trade finance, and payments. As the collaboration progresses, further announcements about the joint initiatives and projects are anticipated. By the way, tokenization is just a category that falls under finance as well. It's just tokenization of projects, tokenization of products. It could be real estate, bonds, securities, derivatives, whatever you want to name it. But tokenization is just another category of the finance. It's just a new avenue stream of money. Now, next news to cover on tonight's live. That's happened behind the scenes, which is massive news coming out of Hedera. Honestly, massive news coming out of Hedera. Well done to Hedera for signing that deal. Now, the next news on tonight's live show is regarding Fidelity. Fidelity and Vanguard. Apparently, Fidelity and Vanguard decided to go dark, aimed at the Bitcoin and stock market panic. Basically, very short, in a very simple term, Fidelity and Vanguard decided to pull the plug so nobody can have some sort of access to sell. Before we go through that news, let's go to the comment section first. Let's see where we are at. Let's see. Hello, Miles. You're the first one I want to hear from when the market drops. Let's go, Casey. How you doing, Casey? How you been? I believe that this is the perfect time for the Phoenix to rise from the ashes, for XRP to rise whilst everything is down at the moment. Well, think of it like this. This is the year, right now we are in the year of banks, institutions, and regulations. Also, ironically, it's the year the Ripple case comes to an end. So we're in the year of banks, institutions, and regulations, also being the year that the Ripple case comes to an end. And what does XRP need for a successful launch? XRP needs banks, institutions, and regulations. And this is the year of banks, institutions, and regulations. And this is the year the case comes to an end. Coincidence or coordinated. Fidelity and Vanguard go dark, aimed Bitcoin stock market panic. Several online brokerages, including Fidelity Investments and Vanguard, experienced massive service outages on the market space on Monday, from the crypto to equities tumbled on increasingly cloudy US economic forecasts. More than 2,800 Vanguard customers reported services were down at 10 a.m. Eastern Time on Monday, while nearly 4,000 Fidelity users were experiencing similar issues. And data from Down Detector shows that, meanwhile, Robinhood has also suspended its round-the-clock trading services due to escalated volatility inside the global markets. And this is essentially while the market turbulence was happening today. Fidelity, Vanguard, and Fidelity and Vanguard are claiming that they had issues on their data side and they couldn't get things up and running. Ironically, on the same day that this is happening, to stop people from selling is what Fidelity and Vanguard are doing. But also, essentially, Robinhood decided to suspend its round-the-clock trading services due to the market escalation. The rash of service outages comes aimed at a broader slump inside the global markets. As investors liquidate their positions ahead of potential US recessions, the total cryptocurrency market fell below $2 trillion down nearly 8% in the past 24 hours. CoinGecko data shows that the digital asset market plunged more sharply compared to the broader markets, which are also a route to the S&P 500, has fallen 2.66%, and the Nasdaq has slumped down by 3.12% in the past 24 hours. Goldman Sachs economists raised their predictions that the US will slid into a recession in the next 12 months to 25% from 15%. So originally, Goldman Sachs had a prediction that the US was going to go into a recession, and they put it at 15% chance, 15% chance the US will go into a recession. Now Goldman Sachs is coming out and saying that there's a 25% chance that we're going to go into a recession. The 10 percentage point increase in US recession odds follows a recent rash of weak second quarter earnings and the lackluster economic data from the US Bureau of Labor and Statistics. In addition, several investors fear the Federal Reserve fumbled a soft landing for the US economy, missing critical opportunities to cut interest rates this year. It's unclear whether investors' rush regarding withdrawal requests prompted the brokerages. Respective service outages, Fidelity Investments and Vanguard did not immediately respond to Decrypt. So essentially, Decrypt was the one that this essentially did the news article, and they reached out to Vanguard and essentially Vanguard brokerage and Fidelity Investments, but they didn't want to respond on why they pulled the plug on their customers so they couldn't sell or do anything onto their assets. Now, here is some interesting news as well on this matter. Senator Elizabeth Warren has decided to come out. Now, Senator Elizabeth Warren, being essentially fully known as an moron and somebody that shares the exact same brain cells as a goldfish, might be disrespectful to the goldfish in this scenario. Senator Elizabeth Warren and other Democrats press CFTC to promptly finalize banning of political event contracts. So what Senator Elizabeth Warren has come out and essentially disputed is that why are people betting using cryptocurrencies on who's going to become the next president of the United States? So Senator Elizabeth Warren has essentially came out and said that, this is very demonizing to politicians. It makes it look very cheap towards politicians. People betting as if politicians are sports, as if politicians is a, sporting event and so on. And it's very demeaning to politicians. What I don't understand is how can it be demeaning to politicians in any sort of a way if politicians have no morals? If politicians have no morals, especially like Senator Elizabeth Warren, someone with no morals in any sort of a way has came out and said that essentially that people are, making politicians look bad. People don't make politicians look bad. Politicians do that job for themselves very perfectly well. Politicians make themselves look bad. There's a difference. People don't make you look bad. You make yourself look bad. Senator Elizabeth Warren, along with other Democratic lawmakers, have urged U.S. Commodity Futures Trading Commission Chairman Rostam Benham to promptly finalize a rule that would ban the event of contracts that allow bets on political news. Election bets cheapens the sanctity of our democratic process. She said that election betting, so people betting on elections, people betting on who's the next, president or who's the next VP or so on, or who's the next senator, makes politicians look cheap. Politicians are cheap. Newsflash. I'll be honest. Politicians are cheap. I've never looked at a politician and went, that's a respectful politician. It's never happened. I'll be honest. Election bets make them look cheap, or the lawmakers said in a letter she sent a letter to the CFTC chairman, Rostam Benham, as if it's major news. Is she not aware that the United States is going through a crazy inflation? Is she not aware that Japan is going through a crazy inflation? Is she not aware there are high geopolitical tensions that they're creating out of themselves? And her main worry is that they're making politicians look cheap when people are betting on them. I'll be honest. She's trying to say that politicians, being a politician or the politician field is not a sporting event. It is a sporting event. Do you know why? Because politicians have more sponsors than a Formula One driver. I'm being very honest. Politicians have more sponsors than a Formula One driver. So why not bet on politicians? And it doesn't make you look cheap. You are cheap. Election bets cheapens them. Each vote replacing politicians' convictions with financial calculations. The lawmakers said in a letter, allowing billionaires to wager or extraordinary bets while simultaneously contributing specific candidates or parties and political insiders to bet on elections using non-public information will further degrade public trust in the electoral process. degrade public trust when it comes to politicians. You think the biggest issue of degrading the whole political field is because we're betting on you? I mean, she must be new to politics. We urge you to promptly, this is what she said, we urge you to promptly finalize and essentially implement this rule to prevent the essentially ramifications of the US elections, she added. Senator Elizabeth Warren, Jeffrey of Oregon, Sheldon of White House of Rhode Island, Chris Van of Maryland, Richie essentially rounded up a team of Avengers of morons and decided to, send a letter out to the CFTC as if it's major news and it must be resorted right now. The CFTC vetoed in May to propose a rule that is finalized and would ban the event of contracts that bet on politician contests and other areas such as those involving gaming, warring, and other methods. These contracts would not be allowed to be listed for trading or accepted for clearing through CFTC registered entities, but it is happening through cryptocurrencies. Event markets such as the Clashy and Poly markets, now Poly market being one of the biggest cryptocurrency betting websites out there, allows users to bet on the outcome of future events, including on the upcoming US elections. Benham said that there has been significant uptick in the event contracts listed for tradings on exchanges registered with the CFTC since 2021. As we approach the 2024 election, voters are already face a political system that allows the richest individuals and corporations to funnel dark money into campaigns without disclosure. The lawmakers said in a letter, the threat of violence and extremism is high. The threat of violence and extreme, if you're betting on a politician through Polymot, how is there a threat of high extremism and violence? You're sitting behind a computer screen and betting, I'm going to vote for Trump or I'm going to vote for Kamala, and this is how much I'm going to put my money down on. How is that extreme? I don't know what it is, but why does Senator Elizabeth Warren always take things to the max step on any occasion? A while ago, essentially, Senator Elizabeth Warren decided to go to congressmen and tell congressmen that cryptocurrencies is only being used for financing illicit activities, and her only proof of that matter was a Wall Street Journal article. Now, what the Wall Street Journal article doesn't understand, and neither apparently does Elizabeth Warren, that essentially cryptocurrencies is a public chain. So we have chain analysis, for example, or Arkham Intelligence, many crypto firms out there who rummage around inside the blockchain spaces and find out which wallet or which wallet belongs to who. And they found out that the amount of illicit money actually being funneled towards illicit activities in cryptocurrencies was about 0.5%. But according to the Wall Street Journal, all of the cryptocurrency money was going towards illicit activities. And Elizabeth Warren decided to use this as an article to go against congressmen and say, this is why we need to ban cryptocurrencies. She always takes things to the max level for no apparent reason, also with never any sort of evidence. Like this time, essentially going to the CFTC saying, and people are using Polymot to bet on cryptocurrencies, or this is a max threat of violence and extremism is high. How? You're betting if Trump's going to win, or Kamala's going to win, or RF Kennedy Jr. is going to win. Where's the max threat of violence when you're betting on someone to win as a politician? She always takes it for no apparent reason to a max step. And the US remains a target for foreign actors who have sought to meddle in our elections. No involvement to Polymot whatsoever, but she wanted to add that into. The last thing that voters heading towards the poll need are bets waged on the outcome of that election. Why? Well, here's the thing. We don't benefit from politicians. We've never benefited from politicians in our lifetimes. So why not bet on politicians so once in our lives we can benefit from them? Here's an outcome. Honestly, not a single person on this planet has ever benefited from a politician. So why not bet on politicians so we can win something out of it? Because when politicians come into power, they always promise 10 different things they're going to achieve. And when it's to get to that position, none of those 10 things get achieved. And once again, the people take a massive L for 4 years. And every 4 years, this happens when a politician comes and goes, I'm going to do this, I'm going to do that. And about 4 years, absolutely nothing gets done. So why not bet on politicians? Because we don't make any sort of profit from politicians for about 4 years. So why not bet on them so we can make something out of them before they get elected? What's the harm in that? The CFTC also doesn't want. See, the CFTC also doesn't have the congressional mandate to regulate elections and campaign activities. The lawmakers essentially said, the CFTC basically said to Elizabeth Warren, this is a very moronic idea. Finally, somebody told her to her face, because apparently she has no brain cells. Benham has previously also, Rostam Benham, CFTC chairman, has previously said that allowing contracts involving political events would push the CFTC beyond its congressional mandate and expertise. Thank God for that. Honestly, the CFTC chairman, Rostam Benham, he has a lot more brain cells, genuinely a lot more brain cells than half the congressmen put together, and Gary Gensler and Elizabeth Warren. But, you know, anybody has more brain cells than Elizabeth Warren. Now, senators, here's another one. Senators unite to strengthen. This is regulations that's going on right now. This is regulations that's going to bring a bit more clarity to the crypto space. So this is the type of regulations that's supposed to be worked upon, not the one Elizabeth Warren was trying, Elizabeth Warren was trying to bring out the goldfish. Senators unite to strengthen the fight against digital asset cybercrimes in 2024. Now, the reason why they're doing this is because they want to regulate the place heavily. They want to regulate cryptocurrencies heavily to bring the institutions, bring the banks in more and more into this field. But before they can do that, they need to have control of the space before the banks and essentially institutions expand their positions or enter for the first time. So before we go through that, let's go to the comment section first. Let's see where we were. Also, if you have any comments, put it down in the comment section. This is a live show right now we're having. It's called the CMF live show. I do this live show every single night. And before we go through that news, we still have a bit more. We still have more news to go from tonight's live show of what's happening behind the scenes as well. But let's go to the comment section first. If you have any questions, put it down. I'm reading everybody's comments one by one, giving a response short and sweet. I'm moving on to the next question as well to get everybody in. No exchange went down on this turbulence. Yeah, ironically, yeah, no crypto exchange went down, just those ones. Happy Pisces, good to see you as well. How you doing? Would lowering interest rates will harm the crypto space? It's a 50-50 type of situation regarding low interest rates. You still refer to her as a senator. Trump let us know her real name is yeah. You had to write the first time, Miles. You had it right the first time, Miles. Politicians are morons. I agree with you, Miles. The word politician, the word politicians would become a bad word. Avenger morons, Miles, you cracked me up. Let's go, Pegs. Rockets are being fired from Lebanon. Fury Jacks, thank you for the information. Because that's what she does best. She's a sticker. She's a stickler. Nobody likes her, even her own party. Lol, I agree, Miles. Let's go, Scott. So, senators unite to strengthen the fight against digital asset cybercrimes in 2024. This is to bring more institutions, more banks in the field to make the market space more transparent and more regulated. So this was a positive regulation compared to the moronic Senator Elizabeth Warren. Discover how US senators are uniting to combat digital asset cybercrimes with new legislations aimed at empowering the Secret Service. Learn about the baptism efforts of strengthening cybercrime detections and ensure law enforcement effectiveness. To address the rising threats of digital asset cybercrimes, the US senators have introduced new legislations aimed at bolstering the Secret Service's abilities to combat these modern challenges. With the growing use of cryptocurrencies for illegal activities like money laundering and finance illicit activities, initiatives is both timely and crucial right now in this matter. Empowering the Secret Service. Senator Catherine and Chuck, also Amy, have come together to propose a combating money laundering in cybercrime acts. The bill aims to update existing laws, something Gary Gensler maybe should have looked into a while ago instead of suing every crypto platform that blinks into the ground. So they're thinking about right now regarding merging old bills with new bills to adapt cryptocurrencies into them. Something that's not difficult to do, but for Gary Gensler, it's like climbing a mountain. The bills aim to update existing laws to give the Secret Service more power to investigate and fight against digital asset cybercrimes. The senators emphasize that the importance of this legislation, saying that the funding of criminal activities through digital assets essentially poses a direct threat to security and safety of our nation. This statement underlines the urgent need to address the dangers posed by digital asset cybercrimes. The new bill suggests changes to the section 3056B of Title 18 of the United States Code. These changes would expand the Secret Service's authority, allowing it to tackle digital asset cybercrimes more effectively. The goal is to improve the agency's ability to detect and prevent cybercrimes in today's digital age. The senator highlighted the need for strong threat assessment capabilities, stating CD financial enterprises are often behind crimes in our communities. If we want to get serious about cracking down on money laundering schemes, it's going to take a strong threat assessment capabilities, evaluating law enforcement effectiveness in combating digital asset cybercrimes. A key part of combating money laundering in Cybercrime Act is the requirement for governments Accountability Office, the GAO, to study and report on how well essentially law enforcement is tackling digital asset cybercrimes. This evaluation will look into the implementation of the Section 6102 of the Anti-Money Laundering Act of 2020. The aim is to ensure that measures to combat digital asset cybercrimes are effective and up to date. They're merging a crypto law with a traditional law. You see, Gary Gensler, this is how you're supposed to do it. 3 senators come together, they're merging laws together. A traditional law with a crypto law merging together. Something that Gary Gensler genuinely struggles with. Now, by providing a thorough assessment of current practices, the bill aims to identify areas where improvements can be made. Board support with both chambers. The push to combat digital asset cybercrimes is not only happening in the Senate. Earlier this year, similar legislation was introduced in the U.S. House of Representatives. This shows a bipartisan effort towards addressing growing threats of cybercrimes involving digital assets. Representatives known as Scott, Zach, Gregory, and Madalena have all supported the companion bill. This widespread backing underscores the urgency and importance of enhancing the Secret Service's capabilities in fighting digital cybercrimes. A crucial step forward, this is the important part, the introduction of combating money laundering and cyber attack is a significant step in addressing these challenges posed by digital assets and cybercrimes. By updating existing laws and empowering the Secret Service, the legislation aims to equip law enforcement with tools needed to effectively combat these modern threats. The senator's statement captures the essence of the bill's objective. This legislation is crucial for bolstering the agency's ability to address new forms of financial crimes as digital assets continue to evolve. Again, Gary Gensler struggles with this sentence as well. So most the methods and capabilities of those tasked with protecting the public from their misuse. The growing use of cryptocurrencies for illegal activities has made it clear that the law enforcement agencies need enhanced powers and updated legislations to keep pace with technological advancements. The combating of money laundering and cyber crime acts represents a proactive approach to tackling these challenges head on. In summary, the efforts to combat digital asset cybercrimes through the introduction of this new bill is a vital and necessary step in ensuring the safety and security of the nation. By empowering the Secret Service and maintaining a comprehensive legislation aims to provide a robust framework for detecting and deteriorating essentially cybercrimes involving digital assets. The unified approach across both chambers of Congress highlights the recognition of the need to strengthen the fight against some sort of cybercrime digital assets. What's great to see in this matter of essentially is when they're trying to make crypto assets safe, it's another indication of how close we are to the institutional clientele entering the field, or the ones that are already inside the cryptocurrency space, expanding their reach on their portfolios. So these are the type of situations, these types of legislations we need in place for more institutional money to be entering the fields, for institutions to be comfortably entering the fields, knowing that the market space is regulated from all these acts and they don't operate in gray areas. Some institutions don't mind operating in gray areas, but some do mind operating in gray areas because it can backfire. Sometimes they'll get sued somewhere down the road by the CFTC or the SEC, and they don't want that headache for themselves. So they prefer it when they're entering into a market space for the first time, especially that it's a fully regulated market space. So there's no gray area operations in any sort of a way. And the ones that are already inside the cryptocurrency space, all the essentially institutions around the world that are already inside the crypto space, they're just going to be expanding their reach. Their portfolios are going to expand a lot more with all these regulations coming into place to fully regulate the market space. And I love to see traditional regulations essentially attached with essentially the blockchain regulations coming together, merging together. The idea of traditional regulations merging with, essentially blockchain regulations is beautiful to see. Do you know why? Because we have been waiting for this for a very long time for the SEC to do, and they never could have done it. unless these senators came into the space and said, look, we'll just do it. We'll be the ones merging regulations and involving blockchain side. Because in Gary Gensler's words, the regulations we have now are perfectly fine. How are they perfectly fine? The regulations that you have now are from the 1980s. How are you trying to say they're perfectly fine for essentially, the blockchain technology we have now? But in his eyes, they're perfectly fine. But in the senator's eyes, no, we need to start merging regulations. Now, here is some major news coming out of the UK as well. Major news coming out of the UK. The UK has, for the first time ever, just green-lighted the first ever blockchain bank. The United Kingdom, a government and a financial conduct authority that was having difficulties approving ETFs, and they just got around ETNs and ETPs, has just green-lighted the first ever blockchain bank inside the UK. And this is what I mean. Expo Bank. Now, some people have heard of Expo Bank and some people haven't heard of Expo Bank. Expo Bank inside the cryptocurrency space. But the Bitcoin-friendly Expo Bank passported its banking license into the UK. Expo Bank, based in Gibraltar, has successfully expanded into the UK market by transferring its banking license to the country. As a result of this action, Expo Bank is now the UK's first bank to provide accounts that offer interest on both Bitcoin and fiat in the meeting and the increasing need for cryptocurrency services, in addition to conventional banking offers. It's the UK's first ever full-on blockchain bank. Green-lighted. They have a banking license to operate. Expo Bank provides interest-bearing BTC and fiat accounts as well, because the fiat is on-ramps and off-ramps to buy the cryptocurrency with, but it's a full-on blockchain bank. Interesting enough, customers can now access interest-bearing accounts in Bitcoin and standard currencies. This allows them to spread their investments and make money on their holdings. As per their release, Expo Bank will provide 1% interest rate on Bitcoin without requiring customers to stake, lend, or even lock up their assets. They will offer you 1% on top of your Bitcoins that you do hold with them. They won't even charge you. They won't essentially even, it's not for staking or lending and so on. No lockups either. They'll give you 1% on top. Meanwhile, Expo's debit card also will allow users to spend their Bitcoins. They can also spend direct Great British pounds to UK banks and invest in the S&P 500 stock, acquiring select cryptocurrencies and access the stable coins regarding through payment rails and the USD bank accounts. Expo Bank has strictly brought its banking license to the UK, allowing it to grow and provide special services to more people. The Financial Conduct Authority, FCA, the Bank of England, and the Regulation Authority, the PRA, and the Gibraltar authorities made this banking license possible. The Financial Conduct Authority, the Bank of England, the Regulation Authority, the PRA, and Gibraltar came together and green-lighted this blockchain bank inside the UK. Circle's collaboration with Expo Bank as well. Last year, Circle, a crypto financial services firm, abandoned the Swift payment platform and collaborated with Expo Bank. As reported by CoinRise, Circle will work with Expo Bank to incorporate USDC stablecoin payment rails as a Swift substitution. Interesting enough, the partnership made Expo Bank the first licensed bank globally to integrate USDC payment rails. Under the agreement, customers will deposit and withdraw money using a stablecoin with no fees from Expo Bank, thus avoiding payments. In addition, the bank offers a one-to-one exchange rate with USDC to USDD. The USDC deposit will be converted to USD, giving members a 4.1% annual interest rate on their savings. Meanwhile, the CEO of the bank, Rocco, stated that the auto-converted USDC deposit and withdrawals at Expo Bank would give users a haven for their savings. Also, he assured users that the platform would be available 24/7, including weekends. UK greenlights stablecoin regulation as well. The recall that in April, the United Kingdom started preparing for the introduction of new stablecoin regulations and guidelines for other crypto activities and assets. According to the economy Secretary, BIM, At the Innovative Finance Global Summit, the move will bring operations such as running an exchange, managing customer assets, and other related activities under a regulatory framework. In addition to stablecoins, the legislation will impact crypto asset activities such as staking, exchanging, and custody services. Under these new regulations, these activities will comply with specific rules to ensure security and transparency for investors. Likewise, in response to the UK's Treasury consultation on the regulatory regime for crypto assets, the government published a detailed final proposal for regulation for regulating digital assets and related offerings in the region. The government believes that the firms dealing directly with the UK retail customers should be authorized irrespective of their locations. So, first of a bank to be fully green lighted inside the UK, a blockchain bank to be fully green lighted. And for that to happen, the Bank of England, the Financial Conduct Authority, the PRA, and Gibraltar had to come together to greenlight this operation. But they greenlighted it. Is basically all that matters is they greenlighted it. This is a massive step forward for the United Kingdom. Massive step forward for blockchain technology inside the UK. Now, here is the next news on tonight's live show as well. US Secretaries of State urge Elon Musk to tackle election misinformation with X's AI chatbots. Before we go through that, let's go inside the comment section first. Let's see where we were. Regulations equal clarity, and that is what institutions want to see. Facts. Simplest way to put it, regulations equal clarity, and that is what institutions want to see. That's fantastic. One step closer to the world adoption of BTC. Well done, Expo Bank. Let's go. So, US Secretaries of State urge Elon Musk to tackle election misinformation with X's AI chatbots. The Minnesota, and this is not a lie, but it's just unbelievable that politicians are the ones coming out with the voice of reason to misinformation. Just picture it for a second. A politician coming out as the voice of reason in their own heads, obviously. In reality, politicians don't have a voice of reason, but in their own heads, politicians believe that they have a voice of reason in the matter of misinformation. A politician whose main job and main goal in life is to misguide everybody 24/7 and feed on their taxpaying money is the type of person coming out and saying we should stop the misinformation, Elon Musk. Minnesota, Pennsylvania, Washington, New Mexico, and Michigan Secretaries of State want Elon Musk to address misinformation about elections being spread by the AI chatbot on social media platform X. In an open letter to the businessman, they cited potential harm caused by the November 5th election situation. And I sent the letter today because the letter from officials pointed out on the instance where Grok, which is Elon Musk's AI project, Grok claimed that Vice President Kamala Harris had missed the ballot deadlines in 9 states after President Joe Biden endorsed her. Something that was widely shared even though it's only available for premium subscribers. The Secretaries of State said changes must be made immediately so voters can get the correct information. So let me get it straight. Politicians, are coming out essentially one by one from every state, Minnesota, Pennsylvania, Washington, New Mexico, Michigan. They're all coming out and saying, why is Grok, essentially the AI chatbot, spreading misinformation about Kamala Harris? I'll be honest. Should I be honest? I'll be honest. Kamala Harris, the misinformation around Kamala Harris, if you want to blame it on, the AI chatbot from Elon Musk on one particular reason, but they do that to themselves. I'll be honest, Kamala Harris's campaign in general is full of misinformation on her side. But also, it's perfectly fine for the Kamala Harris, essentially, campaigners to lie and spread misinformation about their opponent, Donald Trump. That's perfectly fine, apparently, because Kamala Harris's campaign is essentially backed by some major tech companies out there. And these tech companies are, essentially stifling Donald Trump. If you search for Donald Trump's name on a particular search engine, Kamala Harris news comes up. That's okay, apparently, from Kamala Harris's campaign manager's side. And these, states coming up, Minnesota, Pennsylvania, Washington, New Mexico, Michigan. It's perfectly fine for them when a particular search engine, when you type in Donald Trump, Kamala Harris comes up. That's okay. Or when particular search engines, say that Donald Trump's campaigns are AI images, when in reality, they're not. So all these, and there's so much more misinformation that's been spread on purpose from the people that are funding Kamala Harris. That's okay. But Grooks, essentially Elon Musk, AI chatbot, mistakes on one misinformation, all hell breaks loose. We have, Minnesota, Pennsylvania, Washington, New Mexico, Michigan, all coming out. And how can this be? You're spreading misinformation. But when it's the other way around, and essentially search engines that are backing Kamala Harris and fundings spread misinformation, that's okay. Or where they filter traffic to another group, that's okay. But when it's the other way around, it's not okay. Interesting how politicians play. The letter from officials pointed out that, instances on that matter. The secretaries also of state demanded accountability for misinformation on X. They demanded accountability. Imagine a group of politicians demanding essentially accountability on misinformation. A politician. Any word that comes out of a politician's mouth is full of BS. So imagine someone that's full of BS is demanding essentially accountability for misinformation from somebody else. Imagine just that for a second. Somebody that's full of BS, head to toe, is demanding accountability from somebody else on misinformation. It just blows my mind on how these people think. Platforms like X, this is what it said, platforms like X have faced intense criticism for their role in spreading false claims and conspiracy theories around things such as elections and vaccines. Still, till this day, they don't want to give up on the idea that vaccines were manipulated onto people. They're still saying it's misinformation, even though there are many doctors that have came out and said, no, basically everybody was a guinea pig test subject for vaccines. Genuinely, everybody that took a vaccine was basically a guinea pig test subject for vaccines. Until this day, they're still claiming there's misinformation around vaccines. The issue has taken on more urgency with upcoming presidential and congressional election dates getting closer. They're saying now it's urgent. You need to stop the misinformation. Since buying the app, essentially in 2022, civil rights groups have raised concerns about increased hate speech and disinformation resulting from less moderation under Elon Musk's ownership. Since Elon Musk brought it, they've been angry. All these politicians are angry since Elon Musk brought it, because Elon Musk is spreading misinformation about everything that's going on around the world, apparently on X. Never mind, the politicians have lied to us since our birth. Since you were born until now, politicians have lied to you. Every single politician around you, since you have been born on this planet until now, they've lied to you, to your face, on TV, on the news, on the radio, whatever you can imagine. Since you've been born in this planet, they've lied to you, back to back. That's okay. That's perfectly fine. But Elon Musk buying X and apparently spreading misinformation. No, Elon Musk brought X to stop the misinformation. Before Elon Musk brought X, they had FBI members telling people what to filter. They had essentially silencing doctors on essentially Twitter so they don't spread accurate information about what's happening around the world on terms of vaccines. That's what was actually going on. Not when Elon Musk brought it, the misinformation started. No. When Elon Musk brought it, the misinformation stopped. Not started, stopped. So Elon Musk recently, Elon Musk himself recently supported Republican presidential candidate Donald Trump, but has also been accused of peddling his lies, including essentially unsubstantiated claims Democrats were letting migrants cross America through its southern borders so they could vote in federal essentially contests, where essentially Elon Musk was saying they were, opening their borders so they could get votes in for those politicians. Well, I'll be honest, you're opening up the borders, essentially, giving those migrants essentially unlimited bank accounts pretty much, giving them a hotel room and some food. Of course, they're going to vote for you. If you keep people hungry enough, they'll do anything for you. And you're opening the borders, bringing in essentially migrants, give them a bank account, giving them a place to sleep and food in their stomachs. Of course, you're doing it for votes. What, you think you're doing it for the warm heart that you have? You think politicians have morals? If politicians cared about anyone, they would care about their own country. There are more homeless people than anywhere else, pretty much inside the United States, but they don't care. The politicians don't care about United States citizens that are homeless and need food. That doesn't matter. No. opening borders, obviously bringing immigrants and giving them bank accounts and a place to sleep and some food. And I have nothing against helping other people, just to put that into perspective as well. I have nothing against, but there's definitely a hidden agenda when a politician does it. If I see a regular person on the street giving a homeless person a sandwich, amazing, or giving a bowl of food to an immigrant, amazing. If I see a normal person do it, absolutely amazing. But when I see a politician giving a bowl of food to an immigrant or a homeless person, there's always a hidden agenda behind it. It's never because they're doing it from the warmth of their heart. That's just not possible. There's always a hidden agenda. So if I see a normal person doing it, giving a bowl of food to a homeless or an immigrant, I see that as that person genuinely cares. But when a politician does it, there's always a hidden agenda behind it. Now, so including such statements have the Fed fears over how misleading information will affect future voting outcomes. With Elon Musk letting people have freedom of speech, politicians are obviously scared about future outcomes. Grok spreads, apparently, Elon Musk's AI chatbot Grok spreads false information about elections. The XAI developed chatbot Grok was launched by Musk in March, making it available for all premium subscribers of X through its essentially accessibility is limited. Grok incorrectly claims that Harris ballot status reached millions on social media. Secretaries of State noted that this kind of falsehood can greatly affect voter perception and behavior during critical electoral years. Let me just get this part straight as well. So they're also worried about, the people that are voting for them might find out the truth about them. That's a big worry as a politician. But obviously they're not going to phrase it like that. They're going to say, people are, during election year, their voter perception and behaviors in a very critical manner. What they're basically trying to say is voters, the majority of voters are morons, and anything can guide them in the wrong direction. But in general, it's people opening up to their eyes and their brain cells and realizing that most politicians are pretty much full of BS. And with platforms like X, we have the freedom of speech that Elon Musk gives us. So they're trying to take away that freedom of speech so we can't get distracted by the truth and that we still believe their BS information that comes out their mouths. The officials, it's the simplest way to put it, the officials recommended directing Grok's users towards canivote.org, an unbiased website providing accurate US voting information. So the politicians decided to, send that letter to Elon Musk and tell Elon Musk that his AI chatbot should send everybody that asks Elon Musk chatbot Grok any sort of information about votes. They should be sent a website called canivote.org, which is unbiased. Of course it's unbiased. How can it not be unbiased when you have, essentially the Michigan, Minnesota, Pennsylvania, Washington, New Mexico state coming out all together to stop the misinformation on politicians, and they're telling Elon Musk that we've got a platform called canivote.org, which is unbiased. Of course, it's unbiased, and the website providing accurate U.S. voting information. Of course, it is. The importance of ensuring chatbot reliability is emphasized, especially when it comes to misguiding voters, which can have potentially dire consequences. X has yet to respond to the letters from the Secretary of State. I think the reason why X has yet to respond because Elon Musk probably opened that letter, read it, ripped it, threw it in the bin. Ongoing scrutiny combined with pressure from both government agencies and civil rights organizations indicates that the urgent necessities of strong content moderation. I'm sorry, if you're in a civil rights organization type of situation, if you're in one of these groups of people that has no job, and you just protest about anything that happens around the world, please stop. Honestly, if you're the type of person that protests about the most smallest things on this planet, get a job, okay? Just please get a job. Stop protesting. Because the groups of people that are coming out, essentially these groups of people that protest about anything that has zero relevance to their life, these groups of people and the politicians that are coming out from these states have come together and sent a letter to Elon Musk and said, stop the misinformation. So a group of politicians that are full of BS head to toe and a group of individuals that don't have a job are sending a letter to Elon Musk to stop the misinformation. One group has no brain cells, one group is full of BS. And these two groups have come together to send a letter to Elon Musk to tell him to stop the misinformation. One group needs a job and one group just needs to stop talking. So, of strong content moderation strategies and management systems against social networks. What's absolute morons? Both groups, both sets of groups, were absolute morons. Now, here's the matter on CBDCs as well. Here's the matter on CBDCs. For a very long time, they have been preparing you basically for CBDCs. So here's an indication of the footprint of CBDCs. With COVID in 2020, they moved everyone away from cash, which they made everybody go to Apple Pay, Samsung Pay, Google Pay. There was a reason why COVID happened. And it wasn't because, as they described it, it was to get people to switch over from cash, okay? Because they wanted to get people into Apple Pay, Samsung Pay, Google Pay. Ironically, a lot of people don't know this either as well. I revealed this a few nights back, that the World Bank was doing test payments on blockchain technology and on tokenization projects. The World Bank, at the exact same time COVID was happening. So the World Bank was doing testings on blockchain technology, and then we had COVID. And the testings that the World Bank was doing on blockchain and tokenizations was successful. And then somehow we had COVID, which made people switch over from cash to Apple Pay, Samsung Pay, Google Pay, which also made a lot of people go into cryptocurrencies and lose quite a bit of money. But everything is basically a stepping stone for the next move to happen. The CBDCs were always in the plan to happen. Now, there's also a study test to prove that as well. About 80 to 90% of people are using Apple Pay, Samsung Pay, Google Pay rather than cash. In Germany, they still believe that cash carries germs. There was a study test done as well from COVID times. It's very easy to manipulate some people. Now, with everybody shifting over to Google Pay, Apple Pay, Samsung Pay, and so on, now it's starting to make sense on the matter. So here's some news updates on that matter. Google Pay, phone fee, and other payment firms seek to join the RBI's CBDC pilot set to offer e-rupee transactions. So India, just like any other G20 country around the world, so the UK, the EU, the US, Canada, Australia, I mean, the list of them, there's about the 98%, according to the Bank of International Settlements, the banks of all central banks, 63 centralized banks under, including G20, G7 countries, the banks of international settlements said that, there's a study test on it as well, anybody go read it, public information, 98% of the world is in CBDCs. 98% of the world is in CBDCs. Now, putting that to one side, Google Pay and other companies like Google Pay, Samsung Pay, Apple Pay, and so on, they've all reached out to India because India has got to a stage where they're expanding their CBDC now. And Google Pay wants people to use Google Pay to use CBDCs. So if you want to have an understanding of why they made people switch over to another digital platform during COVID times, make everybody move away from cash into Apple Pay, Google Pay, Samsung Pay, these are some of the reasons. So Google Pay, Walmart-backed company as well, phone fee, and Amazon Pay are among the 5 payment firms seeking to join the Indian central bank digital currency pilot by offering transactions via e-rupees. 3 sources directly involved in the discussion said Indian fintech firms Cred and Mobic are the other 2 essentially that have applied to join the e-rupee pilot, the sources added. The Reserve Bank of India started a pilot for the e-rupee CBDC, a digital alternative to the physical currency in December 2020. After initial surge, e-rupee transactions have declined, reflecting the struggle central banks globally have faced in essentially popularizing their digital currencies. Google Pay and Amazon Pay are payments applications offered by Alphabet, essentially Inc.'s Google's and Amazon.com company that facilitates the retail payments over India's widely used Unified Payment Interface (UPI). Initially, the central bank had permitted only banks to offer e-rupees via their mobile applications, but in April, it said that payment firms could also offer e-rupee transactions via their platforms once they are approved by the RBI. Now, you might be thinking, well, this is only relevant to India regarding Google Pay, Amazon Pay, and some things like that, accepting to be able to be the middleman for CBDC payments. But not really, because in the G20 summit last year in New Delhi, every country, G20 country, signed the same declaration to be under the same sets of rules when it comes to cryptocurrencies. G20 summit last year, New Delhi, declaration where every G20 country signed the same declaration. They said the rule should be for cryptocurrencies like this. They said the same way we have the exact same rules for every plane in the sky, we should have the same sets of rules for cryptocurrencies between us. The same way you have the same rules in every country for every plane that flies over, we should have the same rules for cryptocurrencies between us. Now, we can have some differences in regulations, but the majority will be the same. So payment firms are working closely with the Reserve Bank of India. It's going to happen, on a worldwide basis. Google Pay, Amazon Pay, Apple Pay, they're going to be starting accepting CBDCs as well in different jurisdictions. Now, initially, the central bank only permitted banks to offer these e-rupees, and payment firms are working closely with the Reserve Bank of India and the National Payments Corporation of India as well, the Domestic Payments Authority, and are expected to roll out access to e-rupees over the next 3 to 4 months, the sources said. Allowing popular payment firms to offer e-rupees should help fit volumes by widening the user base, and the second source said. Together, these 5 payment firms account for over 85% of digital payments via UPI. So a lot more people are about to go on CBDCs in India because of Amazon Pay, Google Pay, and so on. 85% of transactions that are happening on India's payment system are coming from Apple Pay and Google Pay. So if that 85% suddenly starts doing CBDC payments, pretty much everybody's on CBDCs in India, which averages about 13 billion in transactions each month. 13 billion in transactions each month. So that's one easy way to get everybody to CBDCs, because imagine for a second that Apple Pay starts using CBDCs for payments. You wouldn't even realize it. You still just be paying for Apple Pay, but you'd be paying CBDCs. Now, here is an indication that Kamala Harris is, obviously pro CBDC, and CBDCs are going to happen either way you like it or not. The general idea of CBDCs is going to happen. The Bank of International Settlements, the International Monetary Fund, they're all over the idea of CBDCs, and also the World Economic Forum. The World Economic Forum, the Bank of International Settlements, and the International Monetary Fund, they love the idea of CBDCs. They've been forcing the idea of CBDCs, so it's going to happen either way you like it or not. Now, here is a little bit of an interesting news scenario. So recently, Ripple has mentioned that, they said, let's hear Kamala Harris out. So Ripple has made a donation, just to put a point out as well. So Chris Lawson from Ripple donated to Donald Trump's campaign. I want to point that out first. Chris Lawson donated to Donald Trump's campaign about $300,000. $300,000. It was about $600,000. $300,000 or $600,000. The information is there. It's on his own X tweet as well. Now, so they've made a donation to him, to Donald Trump. But on the other side as well, Donald Trump is obviously against CBDCs, but Ripple and XRP is all about CBDCs. And, we are going into CBDCs, as I've said. So the benefit from going into a world with CBDCs is to be the one that's essentially benefiting from the benefit from CBDCs in a world full of CBDCs is by going for the backbone. At that point, it just comes to common sense basis. And I've said this before, there are 24,000, because there's a lot of people out there that either love Ripple or they hate Ripple. Let me make things very, very simple for you. For the people that love or hate Ripple, let me make things very simple for you. 24,000 crypto projects. Okay, we have massive competition out of those 24,000 crypto projects. In the gaming category, massive competition. Web3, massive competition. Data, massive competition. AI, massive competition. Out of 24,000 crypto projects, only one is doing CBDCs, has a CBDC operational platform. Only one of those crypto projects has won multiple CBDC awards. Most people don't even know there's CBDC awards. So 24,000 crypto projects, only one has a CBDC platform that's operating. Only one has won multiple CBDC awards. Only one is essentially, working alongside the Bank of International Settlements on the public document titled Cross-Border Payments. 11 companies on that list, and Ripple is one of them. Bank of International Settlements, centralized bank, 63 centralized banks, G20 countries, G7 countries, and Ripple's on that list of cross-border payments. Okay, so 24,000 crypto projects, only one is doing CBDC. Only one is doing CBDCs. Only one has a CBDC platform. Only one of them has won multiple CBDC awards. Only one of them is with the Bank of International Settlements and the International Monetary Fund. And only one of them keeps on doing massive speeches in the World Economic Forum. And 98% of the world is going into CBDCs. You don't need to be a genius to figure that one out. So whether you like it or not, we're going into CBDCs. So the question remains, do you want to be on CBDCs or do you want to be benefiting from CBDCs? I would rather choose to be the one benefiting from other people being on CBDCs rather than being the guy that just holds CBDCs. Because no matter what you have, no matter what cryptocurrency you have, everybody will still receive a CBDC wallet, because that will be your normal bank account. And we're not that far off. 2025 is basically when all the CBDCs get launched. the majority of CBDCs is coming out in 2025. Okay, in terms of the Brazil coming out in 2025 and the EU 2025, Russia 2025, India expanding, Thailand 2025. I'm sorry, Thailand already this year they launched their CBDC wallets. 10 million people signed up at the exact same time, crashed the platform before it was in fully to get up and running. And this happened yesterday, by the way. But 98% of the world, and it's 98% of the world is in centralized banks, is in CBDCs. 98% of all centralized banks are in CBDCs. And there is one crypto project with a CBDC platform that's operational, one crypto project that has multiple CBDC awards, one crypto project alongside the Bank of International Settlements on a cross-border payments document titled Cross-Border Payments. So one, again, the multiple speeches, the World Economic Forum, next to the most powerful, richest people on this planet that pretty much control the entire game around them. So, and Donald Trump being against CBDCs might be his downfall to the entire campaign, because when Donald Trump is against CBDCs, he's going up against, not the Kamala Harris campaign. Nobody cares about that. He's not going essentially against the Biden administration. Politicians are morons. They get a piece of paper and they just read from it. Okay, presidents and politicians aren't supposed to be leaders. They're supposed to be listeners. Now, the issue that they find, not me, but the issue that the World Economic Forum, the Bank of International Settlements, and the International Monetary Fund, is that Donald Trump is a leader, not a listener. That's an issue for them. They need people that are listeners, not leaders. So Donald Trump being fully against CBDCs might be the one that, is the downfall of his entire campaign, because they want CBDCs. 90% of the world is in CBDCs, and they want the US in CBDCs as well. So if they get Trump in power, he's going to be pushing every button he has not to do CBDCs, which goes against the World Economic Forum, the International Monetary Fund, and the Bank of International Settlements, which is a losing battle for anyone, to be fairly honest. And they will do anything to remove you from your position. And I think we've all seen how much they've done to remove him from his position by trying to stifle him in court or by trying to take him out, essentially his own rallies. But they'll do anything they can to remove you from your position if you go against what they want you to do. So now Kamala Harris being a listener, not a leader, and I've said this about Sleepy Joe as well. If anybody thinks I'm saying this because Kamala Harris is a woman for any sort of instances, no. Sleepy Joe Biden, is also not a leader. He's a listener. That's what they want. They want politicians to be listeners, not leaders. So Kamala Harris is obviously pro-CBDC, which is good for the World Economic Forum, International Monetary Fund, and the Bank of International Settlements, unlike Trump, which is fully against it. And it's going to happen either whether you like it or not, CBDCs. So Ripple recently came out of nowhere and said that, we should maybe hear out Kamala Harris. Now, Kamala Harris has not did any sort of pro-crypto campaigns at all. She's not attended any essentially pro-Bitcoin Nashville events or roundtables for cryptocurrencies. Apparently, it's a rumor she's going to be attending any of them. And she hasn't so far. So she hasn't shown any indications of pro-cryptocurrencies or pro-blockchain at all. But for some oddly reason, Ripple, came out and essentially said that, we should give her a chance. Ripple said we should give her a chance when it comes to cryptocurrencies. Maybe she has great policies, even though she's never attended a blockchain event and never spoken about cryptocurrencies on a good term basis of understanding what it is. But they said they should give it a chance, which is odd because the other person, her competitor, has 3 NFT projects, done, multiple blockchain events and so on. But the other person has done nothing in blockchain, and Ripple saying maybe we should give her a chance. So, former Ripple board member, has just joined Kamala Harris's campaign. Kamala Harris, pro-CBDC. Kamala Harris is a listener, not a leader, for the Bank of International Settlements, International Monetary Fund, and so on. And she's a listener. And therefore, a former Ripple board member just joined Kamala Harris's campaign. A former Ripple board member has joined Kamala Harris's 2024 presidential campaign team. According to the White House, the announcement and the report by the AP Sperling move comes after his role in managing Biden's $1.9 trillion pandemic aid package and his works as the liaison during the auto strikes. Gene Sperling to bring crypto expertise. Sperling served as a director of the White House National Economic Council under Bill Clinton and Barack Obama, and will serve as the senior economic advisor to Harris as well. His work helped essentially nearly 40 million working families get unprecedented child tax cut reliefs, and over 8 million renters get emergency assistance to help their families housed, and said essentially President Joe Biden in a statement. This is Joe Biden's statement of her joining, Kamala Harris's campaign, and she's a former Ripple board member. I also looked to Gene as a trusted advisor on the economy and gave him some of the toughest assignments, including serving as my liaison to the big three automakers and the UAW as auto workers fought for and secured record contracts, stated Biden. The AP report indicated that Sperling collaborated with Harris during his tenure in the Obama administration when she served as a California Attorney General and often advised her during her time in the Senate. In 2015, Ripple Labs named Sperling to its board of directors to advocate for the company and said, I am excited to, and this is what Sperling said at that time, I'm excited to join Ripple Labs and their mission to dramatically increase the speed and efficiency of cross-border payments through a common internet protocol, he said, when Sperling joined Ripple in 2015 as a board member. David joins Kamala Harris's campaign team as well. And most recently, David Profu, another advisor of former President Obama, joined Harris's team of crypto expertise as well. David managed Obama's 2008 campaign and played a similar role as a White House senior advisor in 2012 re-elections. He joined Binance's Global. Another person that's joined Kamala Harris is Binance's Global Advisory Board member from 2022, and could bring more perspectives to the crypto industry as well. But what I'm more interested in is the Ripple board member that joined Ripple in 2015 and is now on Kamala Harris's campaign. And Joe Biden does a massive speech for this person. Says this is an excellent person that's joining, Kamala Harris's campaign and so on. And Sperling is a Ripple board member since 2015. And when this person joined Ripple, these are the exact words they said, just once again. They said, I am excited to join Ripple Labs and their mission to dramatically increase the speed and efficiency of cross-border payments. This is what this person said when they joined Ripple in 2015. And now they're Kamala Harris's campaign manager. Explains why Ripple said, give Kamala Harris a chance. "98% of the world is in CBDC. Centralized banks, Bank of International Settlements, public information, and International Monetary Fund. 98% of the world is in CBDCs. CBDCs are going to happen whether you like it or not. There's nothing around it. You are not essentially stronger in any sort of a way than as much as you want to believe. Everybody wants to believe there's some sort of gladiator that could, go up against the system. But in reality, you're more likely to be a part of the system than to go against it. And just from that perspective, 98% of the world in CBDCs, according to Bank of International Settlements. And this Ripple board member, now that's part of the Kamala Harris campaign, her speech for Ripple was, this person is excited for cross-border payments. Bank of International Settlements titled Cross-Border Payments, PDF document, public information, which I'm willing to send to anybody, mentions essentially that Ripple is one of those companies on that Bank of International Settlements. Now, a lot of people are probably thinking to themselves, it's Ripple, nothing to do with XRP, is Ripple. For any of those morons out there that are still mentioning to themselves, it's Ripple, it's not XRP. Yes, you are a moron if you are listening to this. And Ripple has multiple times essentially stated themselves that Ripple is XRP and XRP is Ripple. But also, if you don't, take Ripple's word for it, that's a bit weird. But if you don't take Ripple's word for it, Ripple has also released, if you don't want to take a video's word for it of Ripple members saying it, but there's also a PDF document on Ripple's own website on how they're exactly going to be utilizing XRP step by step, pretty much, through their Ripple payments. Because a lot of people still to this day would like to claim, oh, it's Ripple payments, Ripple payments. No, Monica Long on Ripple's website about a week ago described how they're utilizing XRP through their Ripple payments. So for anybody out there that still thinks till this day in 2024. And, you know, honestly, I just can't believe it till this day. There are still people out there that would, you know, believe random information on August 6th. Today is August 6th right now. And 1:34 a.m. London time. And there's still people believing that Ripple is XRP and XRP is not Ripple, and it's two different things, when it never in reality is at all. There's one company by the name of Ripple fighting out and battling out in court, spending hundreds of millions of dollars to save a project they created by the name of XRP, which they said about a few days ago, just for any morons that was still, you know, unclarified on how they're going to be using it. On their own website, they utilized step by step on how they're going to be using for Ripple payments and how XRP plays a crucial role. On their own website, it says XRP is going to play a crucial role. So if you're still wondering for some oddly reason. But yeah, major news that Ripple board member on Kamala Harris's campaign. Coincidence? Coordinated. So, if you, let's go into that comment section first as well. Regulations equal clarity, and there is also, yes, facts. Miles is dropping truth bombs. BS politicians have done irreversible damage to America and the world. Yep. Turns out America was never a country. She's just a corporation. Nothing personal, just business. For this, I blame the media. They are not independent. They're uncontrolled. Yes. I shared the program on X, YouTube, and Facebook. I challenge you to do the same. Let's go, Scott. Thank you so much for that. Ghost Burner, thank you so much for the $50 donation to the CMF hedge fund. Absolutely amazing. I know I've said it before, but I really believe Trump knows in the back of his head CBDCs are coming. Yeah, same. I'm with you as well. Ghost Burner, thank you so much for the $50 donation. Honestly, let's go, Ghost Burner. Definitely to the CMF hedge fund. Absolutely amazing. Good night, Miles. Funky brother. See you tomorrow, same time as usual. You know as well as I do, they're all colluded with each other somehow. Ripple / Kamala, etc. Yep. Ripple supports both parties is a win-win situation. Pretty much. Either one becomes it, either one has going to have CBDCs. So, if you enjoyed this live show, first of all, if you were watching this for the first time ever, and you enjoyed this live show, drop a follow, drop a like. It's called the CMF live show. If you're watching it for the first time ever, it's called Crypto Miles Family, which stands for CMF Live Show. It's actually CMF, Crypto Miles Family. Everything that I do is completely free of source. You know, every single night I come on on X Live and on YouTube Live, and I share the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, regulations, politics, everything that you should know about or essentially happening around you on a 24/7 basis. I bring much more clarity into it by describing in a much more simplified version of actually what's happening. And if you enjoyed this live show, drop a follow, drop a like, and tune into it every single night. It's called the CMF Live Show. We're live on X as of now and YouTube at the exact same time as well. And this is episode essentially 119. This is episode 119. Every single night I'm doing this live show, and this is right now episode 119. So we've done 119 episodes now, every single night. So drop a follow, drop a like if you enjoyed this live show on YouTube. Drop a follow, drop a like if you enjoyed this live show on X. And you know, tune in every single night. And everybody is also inside the comment section is absolutely respectful and amazing. They're all CMF members. And by the way, everything I do is completely free of source. And we have a Telegram group as well, which is completely free of source as well. I never charge you money. I never will charge you money, ever. Everything I do is free of source. Education should always remain free of source, is what I've always said, and I'll always stick by as well. So join the CMF on Telegram as well. We have a Telegram group. The link is on my YouTube. If you're watching us on YouTube, the link is on my Twitter or X profile. If you're watching us on X as well, join our Telegram as well. If you join us live, drop a like. And the news, essentially, the news that we meant from tonight's live show was quite a lot. And just to give you a gist of anybody that tuned in late, we talked about the former Ripple board member essentially joining the Kamala Harris campaign. We talked about Google Pay and Walmart Pay and Amazon Pay joining CBDCs. We talked about also on this live show The US secretaries urging Elon Musk to stop the misinformation, which was absolutely moronic from the secretaries. We also talked about on tonight's live show regarding the first ever bank in the UK that's got green lighted as a blockchain bank, which was massive news with the Bank of England being on board and the Financial Conduct Authority. We also went through news regarding essentially these senators uniting together to merge traditional financial laws with blockchain laws, which is absolutely amazing to see. We also went through news regarding Senator Elizabeth Warren being a moron once again. We also talked about on tonight's live show regarding Fidelity and Vanguard going dark on the Bitcoin situation. We also talked about Hedera Hashgraph joining the International Institution of Finance on tonight's live show as well. We also went through JP Morgan, essentially his perspective on the cryptocurrency space, and they said buy the dip in a tactical way. We also talked about tonight's live show we went through news regarding Bitcoin ETFs, Europe's fourth largest hedge fund manager coming inside the field and telling everybody that they actually own $500 million worth of cryptocurrencies, worth of Bitcoin, which was massive for them to reveal. We also went through multiple essentially reasonings on why the market space is playing out like this. If you want to see that, obviously replay the live show. We also talked about the SPK publishing new regulations for cryptocurrency service providers inside the United States. We also talked about on tonight's live show regarding the US government transferring 300 ETH, and Arkham Intelligence was the one that told it. So if you enjoyed this live show, drop a follow, drop a like, and tune into it every single night. It's called the CMF Live Show. And I will see everybody tomorrow, same timing as usual. And everybody have a great day or a good night, depending on where you're around the world. Now, before we go, let's go inside the comment section first. Let's see where we were. Good night, everyone. See you tomorrow. Or if I see you tomorrow, sometimes usual. Good night, Miles and CMF. Thanks again for all you do for every live. Let's go free and forever. Free and forever. See you tomorrow, sometimes usual. Take care, Miles and CMF. Great live. Let's go. Ray, see you tomorrow, but the same time as usual. Thank you, Miles. Take care and get some sleep. Let's go. Mike, see you tomorrow, same time as usual. Thanks, Miles, for this amazing live show. You are brilliant. Thank you so much for your researchers and educating us in the finance sectors. It is a new paragraph. Three, thank you so much for the kind words. Honestly, is it time to turn off my CMF TV? Let's go. Good night, Miles. Good night. I will see everybody tomorrow, same timing as usual. And the live show, by the way, starts 11:25, 11:30 p.m. UK time every single night. But follow me and turn on your notifications to be alerted when I go live. So click the little bell icons when you follow me as well. Or join the Telegraph, because I tell everyone I go live. But it's every night, 11:25 p.m., 11:30 p.m. UK time. Great program tonight, Miles. Thank you. Let's go. Happy Pisces. See you tomorrow, same time as usual. Susie, see you tomorrow, same time as usual as well. I will see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. CMF, see you tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. See you tomorrow.